Hello, good evening, everybody. The Committee for Financial Markets and Investor Protection is yet again back with an insightful program on options trading. Uh, Markets are at all-time high, equities are soaring high, what to do, what not to do. Hence, we are presenting you with another alternative called options in the equity segment. Now, as your moderator, it falls upon me that I should introduce your speakers. But before that, we have our respected honorable chair of the committee, C.A. Charanjot Nanda, sir. I would request him to please give his opening remarks. Sir, over to you.
A very good evening, ladies and gentlemen. We are back with yet another exciting session on stock markets. Markets have become so trendy nowadays, rolling at a great frenzy at an all-time high. And the best part is that people think that they understand the markets. If market was a person to speak to you, it would have said, क्या यूं ही मुझे चंद लम्हों में पढ़ लोगे तुम? क्या यूं ही मुझे चंद लम्हों में पढ़ लोगे तुम? मैंने खुद को लिखने में बरसों लगाए हैं. मैंने खुद को लिखने में बरसों लगाए हैं. The markets have created so many issues, so many trends, so many creative ideas that now people have so many options to trade in market. And exactly the word option is the buzzword. Now we all are thinking of ways to make money, but with limited risk. And when risk has to be contained, risk has to be mitigated, the only option is option trading. If you feel you are bullish, go for a call. If you feel you are bearish, go for a put. If you feel that the market may go up or may go down, you can take a straddle or a strangle. There are so many options. And for that, we have two of the learned speakers, CA Jitendra Saglani and Mr. Ajay Barik. Both of them come from Nagpur and they have a deep insight into the market. So when I was speaking to them, I thought, why don't I introduce them and ask them? They had taken a session earlier, but on option, particularly now, members with, you're all aware that the Institute of Chartered Accountants of India has now allowed chartered accountants in practice to trade in future and options in equity segment and currency segment. And that is why a lot of interest has emerged in practicing chartered accountants, how they could add value and worth by investment in markets. So for that, we have two of our very reverend speakers, and they will take you through. I will not stand between you and the two speakers, and would like to conclude by saying that when markets are at all-time high, whether you are a bull or bear, you need to have strategies to create value and carry the money home. Thanks for now. Over to Samardeep ji for his further proceedings.
Thank you, Mr. Chair. Thank you, Charanjot Nanda, sir. Before we formally begin the proceedings, it falls upon me as your moderator to introduce the learned speakers for the evening. I'll start with Jatlani, sir. C.A. Jatlani ji is a partner at one of the high-profile chartered accountant firms, having various offices across India. Sir was the executive committee member of the Nagpur branch and has recently held the position of the chairman of the Nagpur branch. Sir has been involved with capital markets, with SEBI specifically as a smart trainer, and has been also involved with NISM and has been also a retirement planner. Sir has also very varied interest in sports as he's an active swimmer and he follows with his daily routine of trading with swimming. Now coming to the second learned speaker, Mr. Ajay Kumar Barik. Mr. Ajay Kumar Barik is a law graduate and has a rich experience of as an HR professional for last 30 years. Sir has also been closely involved with the Nagpur branch. His particularly topic of interest has been invested in equity with risks and as well as rewards. Sir has an excellent command over the technical analysis, and he has been a very favorite amongst the students of BBA for investor psychology. Without any further ado, ladies and gentlemen, let's please welcome our speakers for the evening, and let's hope we have multiple options at the end of this option seminar. Over to you, gentlemen.
Thank you so much, Samandeep ji. Committee on Capital Markets and Investor Protection, the chair of the committee, CA Charanjot Singh Nanda sir, Vice Chairman, CA Kota Srinivas sir, the support team along with the moderator of today's session, and all my dear audience. A warm welcome to you, all of you, on this session, which is a gateway to wealth creation options. So friends, let's start with it. And before we start, I'll be sharing the screen of mine. I hope the presentation now gets visible to you all. Samandeep ji.
Yes, sir. Yes, sir.
Yeah, is there?
Please.
Right.
Yes. Please, sir.
So, friends, today what we are going to cover. So basically, I think without a doubt, we want to understand how options can create wealth for us. But for that, we need to have a very clear understanding of what option as an instrument is, how we can deal with it, the complexity that is involved there. We have to understand all the nitty-gritties of options before actually trading the options. But what happens in real life is that we start trading, we make certain gains, we lose some money, and then finally realize that this is not our cup of tea without understanding the options. And this is a story with most of us. I think I also, when was a say freshly qualified chartered accountant, I started say looking at the markets, did my say bit in the equity markets, and gradually then when I realized that derivatives is something which I can understand and do, I started with options. But of late, obviously, जैसे कि सीखने में समय लगता है, we have to understand and empathize with this aspect that we have to learn. So gradually, it took me long to understand that unless I understand things in greater detail, in depth, बिकॉज अगर हम बात करते हैं कोई भी चीज की, अगर हम हीरे की बात करते हैं तो वो भी 10,000 फीट नीचे है ग्राउंड के, 10,000 फीट मिनिमम. अगर हम बात कर रहे हैं सोने की तो वो भी इट्स डाउन डीप, द ऑयल इज डाउन डीप, सो एवरीथिंग दैट इज प्रेशियस इज डाउन डीप. You have to get into the depth and then finally start doing it. So this is one such session wherein we'll be providing you insights on what options is all about. I have with me the co-speaker, Mr. Ajay Barik ji, and we both will be covering this topic in greater detail. So Ajay sir, let's start with the journey, and I think we'll make this a really interesting one with the practical aspects, not just the theory. So yeah, getting into it, and I'll be moving on to the next slide. Yeah, so options का जो वर्ल्ड है वो इस तरह से है. This is the options world. इतनी सारी चीजें हैं यहाँ पे. कैसे, तो मैं आपको जस्ट एक थोड़ा सा एग्जांपल देता हूँ. अगर हम बात कर रहे हैं, अभी हम लोग स्टॉक्स की बात ज्यादा आज नहीं करेंगे, बिकॉज स्टॉक्स में अगर हम जाते हैं तो स्टॉक ऑप्शंस पे भी हमको बहुत सारा चीज R&D करने का काम पड़ेगा. बट टुडे आई थिंक वी शुड रेस्ट्रिक्ट आवरसेल्व्स विद द इंडेक्स ऑप्शंस एंड प्राइमरीली निफ्टी. व्हाई? बिकॉज why I'll tell you why we have selected that is also needs to be explained. So Nifty is one such instrument which is highly traded. So ये recent के कुछ reports say that it is one of the best traded instruments in the world. So trading बहुत ज्यादा होती है, liquidity बहुत heavy है, बहुत high है, and due to that there is a less impact cost. So what does that mean? Impact cost कम है, इसका मतलब क्या हुआ कि आपके जो buy और sell के बीच में जो gap होता है, जो लोग trades डालते हैं, तो जब बाय और सेल के बीच का गैप है, दैट इज द इम्पैक्ट कॉस्ट. सो इफ यू वांट टू बाय अ निफ्टी say today trading at around 20,969, so if you want to buy that at 69.20 and the seller is at 69.30, so the impact cost is just 10 पैसा. मतलब बीच में जो गैप है और आपका वो 20 का जो बाय ट्रेड है वो भी फिल हो जाएगा, वो भी कहीं ना कहीं फिल हो जाएगा. सो द इम्पैक्ट कॉस्ट इन निफ्टी इज लेस. सो लिक्विडिटी बहुत स्ट्रांग है. एंड अपार्ट फ्रॉम दैट, वेरी इंपॉर्टेंट एस्पेक्ट इज कि अब जब हम ऑप्शंस में ट्रेड कर रहे हैं, वी हैव टू कीप दिस इन माइंड दैट ऑन एक्सपायरी, जब एक्सपायरी होती है तो ऑप्शंस में, तो इंडेक्स में हमारे पास में एवरी वीक एक्सपायरी है, लेकिन स्टॉक्स की बात करें जब एक्सपायरी होती है तो स्टॉक्स में हमको अगर हमारे ऑप्शंस में एटीएम, आईटीएम, ओटीएम का कंसेप्ट है, सो इफ द ऑप्शन टर्न्स एटीएम और आईटीएम, रादर आईटीएम इन द मनी, तो हमको डिलीवरी देनी पड़ेगी, स्टॉक्स की डिलीवरी लेनी या देनी पड़ेगी. सो दैट इज द रीजन कि अगर हम बात करें निफ्टी की, तो वो इट इज अ कैश सेटल्ड काइंड ऑफ कॉन्ट्रैक्ट, और कैश सेटल होने की वजह से हमको कोई डिलीवरी लेना या देने का ऑब्लिगेशन या रिस्पॉन्सिबिलिटी नहीं है हमारे ऊपर. सो दैट इज द रीजन आई थिंक वन ऑफ द बेस्ट इंस्ट्रूमेंट्स वेयर वी कैन ट्रेड and we can actually have all the aspects in favor is Nifty. Now getting further, sir, I'll just move on and directly हम लोग presentation पे आते हैं. And yeah, so अब हम बात कर रहे हैं option myth versus reality. I hope Samandeep this is visible to everyone. The screen is visible. Yeah,
so very well visible.
I have two screens, so I'll be sharing the second screen when I come to the practical aspect. This is the presentation part, and I'll be sharing the other screen as well. Right.
Yes,
Yeah, sure. So now, friends, coming on to the myth versus reality, myth vis-a-vis reality. Yeah. Sir, शुरुआत करते हैं और लेट्स मेक इट इंटरैक्टिव. सो कैसे कैसे डिफाइन करेंगे सर ऑप्शंस को? ऑप्शन रियलिटी में क्या है, पेपर पे क्या है?
Thank you, Jitin sir. Good evening to everyone. My sincere thanks to Nanda sir, then Srinivas sir. I'm highly thankful for giving me this opportunity to explain something about the stock market, and particularly in options. Today's our topic is option, a gateway to wealth creation. Really, it is a wealth creation or is a wealth destroyer? That definitely we'll learn in this session. Now, the coming to this session, as already told by Jitin sir, it requires a deep study. अगर हम जैसे एग्जाम्पल दे रहे हैं, आपको अगर ऑयल चाहिए या गोल्ड चाहिए या आपको डायमंड चाहिए, then we have to go into deep so that we can get a good result. This is the same thing. In option it requires a deep study. If you talk about the option myth vis-a-vis reality, there is a lot of myth in the market. In option, people gets a lot of money, people lose a lot of money. But thing is that really option, there is a myth in the option, but it is a reality. But thing is that if you go to number one, then option in reality vis-a-vis
on paper.
Yeah.
So basically सर सवाल ये है कि ऑप्शन एक्चुअली पेपर पे हम लोग बात करते हैं तो व्हाट एक्चुअली इट मींस कि डेरिवेटिव्स का एक कॉन्ट्रैक्ट है. कॉन्ट्रैक्ट में एक बायर है, एक सेलर है, और बायर सेलर के लिए भी दो इंस्ट्रूमेंट्स है. अब ये दो इंस्ट्रूमेंट्स है, एक है कॉल के रूप में, दूसरा है पुट के रूप में. लेकिन अगर मुझे प्लेन लैंग्वेज में किसी को पहले ये समझाना है कि ऑप्शन क्या होता है, तो मैं चाहूंगा कि उस तरह का कुछ एक लाइनर दो लाइनर आप बताएं कि जिससे ये समझ में आए कि ऑप्शन होता क्या है. सो अगर कोई बेसिक पहली बार कोई अटेंड कर रहा है ये सेशन इस तरह का, सो उसकी अंडरस्टैंडिंग थोड़ी सी क्लियर हो.
Option is nothing. It is just a part of the derivative segment. Derivative, we are having futures and options in the stock market. Whenever we are talking about the derivative, there is a future and option. In options, we are having a lot of options also inside. Options means this is actually it was initially made up for the hedging purpose, but later on it was converted into a trading instrument. So option means you are having a lot of strike price, you are having a lot of this thing instrument also. So that means whenever we are going in option, then you are having a lot of options in strike prices that you need to be studied.
Sir, just to interrupt and tell this, so basically मैं expect कर रहा था कि example की, the example goes like this. So if I want to buy a life insurance, ठीक है, so my life is an asset and I want to cover my life. So option जो है मेरे पास क्या options है? Actually I take an insurance. What does insurance means? कि अगर मेरे लाइफ का कोई वैल्यू निकल के आता है तो उतना पैसे इंश्योरेंस कंपनी पे करेगी मेरे बाद में, एंड फॉर दैट आई हैव टू पे व्हाट अ प्रीमियम. सो ऑप्शन को अगर मैं एक्सप्लेन करूं एक एग्जांपल के रूप में, सो दिस इज काइंड ऑफ एन ऑप्शन कॉन्ट्रैक्ट वेर इन आई हु वांट टू टेक एन इंश्योरेंस पे अ प्रीमियम टू अ इंश्योरेंस कंपनी. सो अगर मैं इंश्योरेंस प्रीमियम किसी कंपनी को दे रहा हूं तो मैं मेरी लाइफ को इंश्योर कर रहा हूं, एंड फॉर दैट आई एम पेइंग ए प्रीमियम. सो ऑप्शन जो है रियल लाइफ में इसी तरह से वर्क करता है. देयर आर मेनी केसेस जो हम लोग ऑन पेपर जो हम ऑप्शंस की बात कर रहे हैं डेरिवेटिव्स कॉन्ट्रैक्ट की, उसको रियल लाइफ में अगर हम देखेंगे तो बहुत जगह पे ही अप्लाई होता है कि इंश्योरेंस कंपनी भी एक ऑप्शन कॉन्ट्रैक्ट ही दे रहा है हमको, वो हमको ऑप्शन कॉन्ट्रैक्ट बेच रहा है. दोज आर द राइटर्स. इंश्योरेंस कंपनी एक तरह से राइटर है, और यहाँ पे जो मैं प्रीमियम पे कर रहा हूँ, आई एम द बायर ऑफ दैट ऑप्शन. सिमिलरली अगर मैं दूसरे एक एग्जाम्पल की बात करूं कि एक लैंड है. अब लैंड में होता यह है कि मुझे कोई लैंड अगर परचेज करनी है, सो नॉर्मली जो टर्म्स होते हैं वो इस तरह से होते हैं कि मुझे आज कुछ एक एडवांस टोकन अमाउंट देना है और मुझे वो लैंड का जो प्राइस है वो फिक्स कर देना है, उसका टेन्योर फिक्स करना है कि इतने पीरियड के बाद में मैं लैंड को फाइनली एक्वायर करूंगा, एंड उसके बदले में इतना पैसा मैं फाइनली दूंगा. तो एग्जाम्पल के तौर पे आज मैं कोई लैंड देख रहा हूँ जिसका एक्चुअल प्राइस है 10 लाख रुपए. मैं आज सामने जो सेलर है उसको बोलता हूँ कि आई विल पे यू 50,000 रुपीज टू बुक दिस लैंड. आई विल पे द रेस्ट ऑफ द अमाउंट on the maturity of the tenure, which is say 6 months. So 6 months. Yes. Sorry.
I'm sorry to disturb you in the flow of your thoughts. So there have been requests from our members to kindly converse in English, as many of the members are from southern region as well. They're not well versed with the language that the current webinar is conducting into.
Perfect. I thought that it would be like if I continue in English, people would be minding that, but I'll continue in English, not a problem.
Thank you.
So,
sir.
yeah. So what happens is I'm coming on to the say example, the second example. So if I'm dealing into land, I want to purchase a land. So if that piece of land, say that the price of the land is say 10 lakh rupees. Now I have say 6 months in my hand to enter into a contract by paying say 50,000 rupees as a premium. Now 50,000 rupees is a premium, 10 lakh rupees is the value, and I have say 6 months of time. So this is again an example of a real life option. So what I'm trying to convey is that on paper, the option contract, which is there on the exchange, we have similar kind of options contract in our lives, which are actually we are dealing in and out, but we don't realize, because once it comes onto the exchange, the mindset changes, the entire concept change. The concept remains the same, but the attitude changes because it's actually happening on the exchange. There are numerous buyers, numerous sellers, and there would be change of hands in between those kind of those kind of situations. So right, sir.
Right.
So coming on to the second part, this is the second myth. It's a quick money scheme. So what do you suggest on this? What is your take on this?
Fine. Actually, if you say it is a quick money scheme, but for those who know the options very well, but who those don't know, they should not put their hand into the option because it is a wealth destroyer. That means option, if you are trading in the option, it is a depreciating asset. You know it is very well. That means if you enter at the right time and exit at the right time, then only we can make money. Else, definitely we are going to lose our premium. Normally in option, always we pay the premium only. So definitely we are going to lose the premium. So whenever we are going to trade in the option, you have to be very conscious. You have to be very command over that strategy or this option things.
So basically, to sum up, I would say this, that it is actually a quick money scheme for those who understand it. Unless you understand it, unless you absorb it, you should not be trading into it. The quick money scheme is for not for those who actually don't understand it. So quick money is always there, but you have to get into the details of it. So we would be covering certain details because 3 hours of learning an option, I don't think sir will be doing justice to the entire topic. It takes many days to understand it. Even after say getting into the theory part, which we had been covering options for our students, and we take almost like 15 to 20 hours of class. And after that, also the practical aspects keeps on going on. So I think it won't be a justifiable thing doing it in 3 hours, but we'll try to do justice as far as making it understand conceptually, as well as certain aspects of it, people who are actually dealing into it, how to make a better trade, how to actually say do a fine trading after listening to this particular session. Right, sir?
There is a saying in the market, if future has no future, but option has many options. So better hai, we should prefer options, but with adequate knowledge.
Right. So coming on to the third point, that is, it is complicated and risky.
Yeah, it is highly complicated and risky, but a person should understand, actually there is nothing in complication, but we ignore it. We don't want to learn it. If somebody is who has interest to learn, he can learn. Nothing is impossible in this world. But the thing is that we are so lazy or we are not interested to put our efforts to learn that thing. So it is definitely it is complicated, but if you try to understand and learn, it will be easier.
Yeah. So my 2 cents on this is like we have like call option and put option. So two options which are there, which are actually traded on the markets. And obviously we can buy it and we can short it. We can actually sell it. Shorting word is there, selling word is there. The third one is writing. So the third word which we actually have the market has coined for these kind of trades is writing. So buying has 1 word, but selling has 3 words. Selling, shorting, or buying 1 word, rather the second word is long. So buying and long, that is 2 words for the buying side, but on the shorting side, the selling side, we have 3 words: selling, shorting, and writing. Risk. So risk, obviously, we'll be discussing it today. Risk is there. Risk without returns. Rather, when we get returns, there is a risk.
Risk is everywhere.
So risk is everywhere, depending upon what kind of risk you wish to take and what kind of risk suits you. So we'll be getting into those aspects as well. So, sir, the 4th point here is only for professionals. So what does this mean, professionals?
Only for professionals. If you talk the word professional, that means all the professional rules should be followed. That means the person who should be working in the option, for example, like a chartered accountant, he's a professional. That means he's professionally qualified by having the degree of chartered accountancy. Then only he can be called as a professional. But having a lot of experience and knowledge, then only he can be work as a professional person. Like this is stock market also same thing. A person, if he want to work in a option trading or option segment, that means he has to be trained himself professionally.
So, adding 2 cents of mine here. Here, what we have mentioned here, sir, debunking the belief that option trading is exclusively for Wall Street professionals. So here, what this means is that we have to be a professional trader. For that, we have to gain professional knowledge. There should be a structured course that we should undergo, and we should then practice. So, as sir rightly stated, that while becoming a chartered accountant, if you just say go back and see what our course was, so we had to pass 3 levels of exam. Beyond that, we had to go some practical training as well. And after that, it took around 4 to 5 years for each one of us to qualify and become a professional. So when it comes to options trading, why not take certain courses, be it a self-learning kind of module, or be it a trainer training you. But you should be going through that. You can also read books for that matter, because books are there, plenty of books are there. And we as a chartered accountant can definitely understand and decode what the language says, what the crux is. So we can do that on our own. We had did it on our own, but all said and done, there could be a requirement of a training, professional training. And after taking that, you can actually be a trader yourself. You need not say this line means that you need not be there in the Wall Street or rather Dalal Street. You can be here and be a professional, right?
Right.
So going further. Yeah. So here the myth, there are certain more myths, sir. We actually had spotted out 8. There could be more, but this is what we perceive. So we are covering here those myths. So is option writing the only way?
This is very important question, and it's also crucial question. Number of people is telling me there is only one way to make money in the option, that is option writing. But it is not like that. Whenever you are actually option is a double-edged sword, you should know how to use that sword in which direction. Suppose I'm selling an option, that means I should have a sufficient knowledge how to handle the losses or gain of the trade. Similarly, if I'm an option buyer, then also I should know when to buy the option and when to exit the option. That means it is a both-edged sword that should be used in a proper way. Unless you don't have the knowledge, you cannot use.
So as you rightly stated, sir, I just wish to bring this to the notice of the audience. Audience might be knowing this, but at the cost of repetition, I wish to do it. So there are just 3 possibilities. Market going 3 ways. One is up, the other is down, and the third is sideways, right? So while you are writing an option, while you are selling an option, in 2 of the 3 situations, you make money. How? We'll try to cover this in later slides. But as of now, you just need to understand that out of 3 situations, there are 2 situations in the favor of option seller, option writer, or option shorter. Okay? I'll not use these words now. I'll just be using one word, that is writing. So option writer has, out of 3 situations, 2 situations in his favor. Now, only one situation goes against him, and that is where the probabilities game comes into picture. So people feel that because this is something that people have heard, out of 3, 2 situations are in favor, so you should be writing. But I tell you, buying is one of the most rewarding kind of things, and you have to understand when to buy. So option is all about timing. People keep on saying this, while in investing world the rules are different. They say that the timing in the market is not important, time in the market is important. But when it comes to trading, and especially options, it is all about timing. So timing, how to decode that, how to actually understand where to actually put your money, where to bet. We'll be trying to cover a little bit of it when we are on to next slides, right? Yeah. Coming on to the 6th point, wealth creator or destroyer. We have been repeating this, sir, and here we have written that traders actually get carried away. I'll just repeat whatever is written there. So I'll just read it out. Traders get carried away and feel that they have been gifted with Midas touch, and this marks their journey towards losses. Maintain a trade setup rather than illusion of being a hero. So I want you to just put some light on this.
Now the question comes, wealth creator or destroyer option. It is depend upon our positions what we have initiated. Number one, if we have bought an option paying a premium of ₹50 for a certain strike price, it goes up according to our direction and according to the time frame whatever we have analyzed. So definitely it will give a good result. If we have purchased a option 20,000 K call option by paying a premium of ₹50. Suppose as per our analysis, we are anticipating the market will go to 21,500. Suppose we have purchased the option at the ATM, that is at the money strike price, it will go to 500, but we have already purchased that is the premium by paying 50. That means you are gaining here 450. How it is? We have got 21,000 to 21,500. 21,000 से 21,500. That means there is a movement of 500 points. But to gain the 500 point, we have already paid only ₹50. That is premium. Whatever premium we have paid, that will be our cost of that option. That means 500 minus 50 is equal to 450 that we are getting there. Similarly, if you go for writing the option, suppose we have written the option, same option, 21,000 call option we have written, and we got the premium of 50, for example, and the option goes against us. That means there is a wealth destruction. So similarly, we have to choose what type of option we have to initiate in accordance with our analysis. That is most important. That's why it is called a wealth creator and a wealth destroyer.
So adding my 2 cents to whatever Seth said, here I wish to say this, that what happens is when traders start trading, it happens so that a couple of your trades turn in your favor. Whatever Sir said. So just adding to that 450 points was in your favor. So 1 or 2 trades in your favor, and then you feel that this market is meant for me. Now you feel that I am on the top, and whatever I do is something market will actually try to oblige. See, friends, market is nowhere to oblige you. There is no single rupee that market is obliged to pay to you. So you have to decide where you have to enter, what kind of risk you have to take, and your risk will be calculated. So selling options carries a lot of risk, but the probabilities are in favor. Buying options carries a little risk, but the probabilities are not so in favor. So at times you create wealth when you are doing certain things which are consistently making money. But if you try to go on the top without understanding that these things may say backlash you, may actually turn up a little differently, then it's a wealth destroyer. We'll try to cover this by practical examples. Here, we just have to burst that myth that it is a creator for sure, but you have to understand it. Every trade is a new trade, and every type of risk is a new risk for you. You cannot take a situation wherein lastly you have made money in certain trade, that same trade would repeat here. So आपको ये understanding रखनी है. You have to keep this in mind that things won't be repeated every time. Yeah, your strategies will definitely work, but you have to understand and analyze and put those strategies to work at right point of time. Coming on to next point, which is operator driven. So why we have covered this negative aspect here, operator driven.
Sometimes people say that this stock or this thing is operator driven. But to my experience, whatever I've learned from the market since last 7 years, I'm very active in the market. But it is not like that. Nobody can operate the market. It is very difficult to operate the market. It is controlled the market. It is just it's like a myth, that's all. But whenever you are working in accordance with the market direction, as per the adequate knowledge, it cannot be ruled out the market is driven by the operator. No, it is not like that. So I think, to my knowledge, market is not operator driven. In absence of our knowledge and at the layman view, we can say it is an operator driven. I don't think it is so.
So basically, while talking about stocks, it happens so that certain stocks, there are players who actually keep on trading in the stocks. So say for that matter, there are Nifty 50 domain, there is a Nifty Next 50, there is Nifty 100, 200 kind of domain. So at times, if you talk about certain stocks, there could be certain players who are dealing regularly in those stocks, and those stocks you could take a review that those are operator driven stocks. But largely, when it comes to market, when it comes to Nifty, and that is the reason we have chosen Nifty, as I already stated in the very beginning, that's the liquidity is very high. There is actually a low impact cost. So one such reason is Nifty cannot be controlled by people. So obviously, the concept of operator driven may go well with certain stocks, but not with the entire market. And for that, what tool you have? If you believe that operator driven is the case, obviously you should not be here in this session. But if you are here in the session, if you want to understand if it is not operator driven, then what is the case? Then this session is meant for you. And I think in next few slides you will get the clarity that why we are calling it as not operator driven kind of thing. Last point, sir, denial that options create wealth.
Yeah, definitely. Here you are discussing a lot of things. You may be confused. Whenever you go to practical and you will see how the options work, how it is a wealth creator, wealth destroyer. On the basis of examples, we will see. But theoretically, you can discuss a lot of things. But I think we will go to the practical things and we'll come to know what is what.
Yeah. So I just wish to add here, keep the mindset positive. At times, so what happens is persons who are trading in the market, they see their trade book as a negative kind of yielding book. So at times, the negative mindset is a sure way to losses. You always feel that you cannot make money in options because you have seen people losing money. Even we as a chartered accountant professional, when certain traders who come to us for the return filing, IT return filing, the first thing that we see in the returns in the books is a loss when it comes to traders, and that loss could be a futures loss or an options loss. So seeing that, we also have this negative mindset that this is not a place to make money, this is not a place to create wealth. But that is not the case. Even if there is a disclaimer on various websites stating that only 10% people, 11% people, or 9% people are making money, I still believe that 9% people who are making money, why they are making money? This is a big question to ask yourself. This is a big question to understand. And this is something where you should be thinking of that why I am not in those 9% people, why I am not in those 5%, 6% people who are actually making money after, say, giving the brokerages. So I think negative mindset would never lead you profits. It will definitely lead you to losses. Create a positive attitude and you can win. Your dreams can definitely come true. So now taking this further, I hope this was interesting. This was something which we actually had created a background, and now we are taking further with common issues faced. So here we will be discussing the issues as well as the concepts, because without proper education, proper knowledge, the lack of proper education is something which puts you on a back foot. So we are coming on to this part, right, sir? So lack of proper education. The first part is moneyness. Sir, I think we should now start sharing the screen wherein we'll be putting say things into picture, the right perspective. For that, I'm just turning it on. So I just need a confirmation from one of the viewers, rather Samandeep, if you are there.
Yes, sir. The trading view is live and up for running.
Yeah, trading view is there, visible to you, right? Fine.
Yeah.
Fine. So friends, as we are here not to say promote any products or anything else, but since these tools are the tools which are available publicly, we'll be covering those tools. There could be certain tools which could be a paid version also, or certain brokerages might be supporting it. But our interest is primarily to make you understand, and for that we'll be sharing certain tools here. It is nowhere a promotion of any of the tools, right? So please take this positively and in that sense, right, sir? So here I'm onto the NSE website, wherein I'm just starting with the option chain. So I have actually loaded this before we started the session so that we can have it readily available. So here, if you just type into Google NSE option chain, you'll get this. You'll get this first, the website of NSE. Mm-hmm. Yeah, and in that you find this. Now here, if you just observe option chain, this is for equity derivatives, and this is specifically for Nifty. Underlying is Nifty. So option, it derives value from a asset. Here the asset is Nifty, and this is the basic aspect of options. Now this is the contract, which is of 14th of December 2023. Now if we see here the option chain, what we understand, I'm just covering certain basics of option chain right now. So if you understand this, actually Nifty was where, I just go up first and spot you here. Nifty was at 20,969. That's what I quoted. So 20,970, the round figure. So 20,950 is the near strike price to that particular spot level, right? So I'm here now and I'm just coming on to here. So 20,950 is, say, the point where the Nifty is actually. This is slightly complicated. So the site is a little.
So I believe you zoomed in to the website. That's why if you could just zoom out.
Just a moment. I'm trying to do that as well. So is it visible still? I've just
the screen is visible. It's 90%. I think it should be easy. Just try, sir, if you're able to scroll through the option.
Even if I'm not able to do this, what I'll do is I'll actually try to show you some other websites as well, the paid ones or some subscribed ones. So here I have just clicked on the strike that is 2950, and I'm just choosing the date that is 14th of December. So now here all the strikes are available once again, and so here there is an option chain. 2950 is the spot price. Around that price, the spot is trading, and these are the call options and these are the put options, right? So left side is my left side is the call options and my right side is the put options. These are in the money call options. In the money call options. Why we say in the money? Because from 20,970, these highlighted ones are the ones which already the spot level has already crossed these levels. It is already trading here, and these are out of the money call options. 21,000, 21,050. This side is all out of the money call options. So I hope this is very simple and easier way to make you understand what is say at the money. This is at the money 20,950. These are in the money, and 21,002 beyond this, the upper side is out of the money. Similarly, when it comes to put, it is similarly when it comes to put, it is exactly the reverse. So 21,000 and above are all in the money put option because this price is yet to be achieved, and 20,950 is ATM put, ATM call, and below that are all out of the money put options. So I hope seeing at the option chain, you'll be able to understand this. And this is the basic aspect of understanding what is moneyness. Moneyness means there is ATM, there is ITM, and there is OTM. So ATM, ITM, OTM. ATM matlab at the money, OTM matlab out of the money, and ITM is in the money, right? So this is a basic concept that I wanted to make you understand. Looking at the option chain. Now coming back to the presentation, I'll just switch the screen here. So I think the presentation should be visible to you all.
We are back to the presentation. Please go ahead.
Perfect. So moneyness using option chain. We just demonstrated you that part. Now payoffs. What is payoffs? So I just remember what Nanda sir said in the very beginning. He said that strategies are to be understood. The problem here is, although we want to understand strategies, the basic principle to be understood is payoffs. What is payoffs? So I'll have to keep on switching between the screens now. So I'll just again switch here and come down to the second screen. I'll stay on the second screen, and I think I'll read the presentation pointers and try to cover in practical here while being on the screen. Friends. So just look at this particular option, 2950. This expiry is, if I'm not wrong, of 14th of December. The last traded price, which my actually pointer is actually on that, is 148, right? So 2950 call option, which I call it as ATM, which is actually known as ATM call option, and it is trading at 148. So now coming on to the put side as well, just trying to make you understand what is the premium here and what is the premium this side. So premium on the put option 2950 is 68. Now, if I tell you to calculate your payoffs, what does that mean? You have to calculate your break-even point from where you will be actually making profit if the Nifty expires on 14th of December. So on date of expiry, that is 14th of December, what should be the Nifty level so that you do not make a loss in this particular trade. Hope you understood this. I'll repeat it. On the date of expiry, while Nifty is at 2950 right today, on 14th of December, what should be the level of Nifty so that I do not make any loss here? If I'm buying this option at 148, what would be the level of Nifty wherein I'll be actually making profit? So I'm having my calculator here. I'm just showing it to you. 20,950, and I'll be adding 148 rupees because that is a cost that I'm paying, right? So 20,950 plus 148, my actual level of Nifty wherein I'll be breaking even is 21,098. I'm just rounding it off to 21,100, considering this as 150 rupees. So 150 I'm paying here. So 2950 plus 150, 21,100 K upper. Beyond that level, I'll be actually in profit. So 21,100 till that point of time, I'm not making any money as of the date of expiry, not today. In between, if it goes up, obviously this price will rise and I'll make money. But I hope this is understood.
This is my capital what I have paid.
This is the capital that I've paid. This is the money that I've invested. And beyond this point, beyond this level, sir, as he stated, like 50 rupees, you're paid a premium. And if it expires, say 500 points higher, then 50 towards your cost, 450 would be your profit. So here, if it expires, say notionally, if we expect that this expires around, say 21,200. So my profit will be what? 21,200 minus my break-even level will be 21,100. My profit will be 100 rupees, right? So by investing 148 rupees, by paying 148 rupees, I'm making 100 rupees. So option is one such actually instrument which gives you this kind of leverage that you invest less and you make more, right? But you have to understand now second aspects, third aspects, will be coming on those aspects. So I think we'll be reading the presentation points here and we'll be covering those things on the screen right away. Now, the next point, payoffs, I hope you understood. Similarly, the put payoff, if I'm buying this put at 68 rupees, so 20,950 minus 68, I'm considering this as 70 for the ease of understanding, considering this as 70. So 20,950, 2880. So below 2880, inputs, you have to put a negative sign because if it goes down, then and then you'll be actually making money, right, sir? So
it's very simple. Whenever you are buying a call option, simple, you just add that premium to your strike price. Simple. Then that is the break-even point. Whenever it goes up the break-even point, that is your profit. Similarly, in option side, put side, it is just negative.
It's just the reverse, right? Now, open interest. And this is very interesting. I think I have to share the presentation here because when we cover the open interest, unless we share the presentation part, we'll not be able to understand the open interest aspect. Yeah. So I'm back to the presentation screen, open interest interpretation. So how to interpret open interest? What is open interest?
Open interest, the word itself is clear. Total outstanding position in the markets. That is called open interest. मतलब जो open interest already market में open है, that is alive, open interest. Suppose open means where there is a buyer and there is a seller. It means what? Anybody can sell? Anybody can sell?
So
It is a one contract or two contracts.
So basically, I don't think we'll be getting responses here, but I'll tell you what sir was emphasizing was if there is a buyer and seller, it means one trade because obviously it's a contract. So contract has two players, one is buyer, other is seller. So it is one open interest. If I am actually buying three nifty contracts, obviously someone is selling three contracts. So open interest is three. Likewise, there could be buyers and sellers, but those contracts would be considered as one. And open interest actually depicts how many contracts on that particular day end rather, or at given point of time are actually open in the market. So if you see open interest at 12 noon, and if you see open interest at 3:30 p.m., you could find a difference because at 12 noon, there were certain contracts that were open, but during the day, due to market volatility, due to fluctuations in the market, people might have exited their positions. So buyers might have closed their positions, they might have sold. There could be certain sellers who might have bought it. So those positions would be knocked off. So open interest actually can reduce, can go up or down depending upon the market fluctuations and volatility. But now here we are actually interpreting open interest. So what the interpretation means? So here is a table, and I hope this is visible. So price action is something that is very important. If the price is rising, so we are now on to Nifty aspects, and we'll be covering that. So if Nifty is rising, and if the open interest is also rising, that is, people are building say positions there, it interprets that market is strong. That is, Nifty is strong and the view is bullish. I hope you understood this. Price action, price is going up. Open interest is also building up. Actually, open interest is building rather, and which actually in turn means that the view is bullish. Similarly, the price is rising, but OI is falling. That is, open interest is falling. Does that happen?
Yeah.
It happens.
Yeah.
It actually happens. It means that short covering is happening. The people who have actually created short, since the price is rising, they are covering their shorts. They are actually getting out of the trades. This again means the view is bullish, right? Now, if the price is falling and open interest is rising, it means that the stock, rather Nifty, is going down and open interest is also building up. It means people are bearish on the market. There are people who are actually wanting to sell the market at each and every price or each and every rise for that matter. So the open interest is rising and the view is bearish. Falling price action is falling, that is Nifty is falling, and open interest is also falling. So people who have created their buy positions are willing to sell because the market is going down. So in two situations, we see a bullish view, and two situations we see bearish view. This needs to be applied. Friends, you need to understand this. This needs to be applied while taking a trade. Very important. Before you take a trade, there could be certain checklist pointers which you should be noting. Actually, we haven't prepared a checklist right now in this presentation, but if you start noting this down, and I'll definitely provide this presentation copy to the committee, and whosoever wants it can actually claim it. Not a problem. We can provide this for you for your records. And I think the presentation, rather the entire session, is getting recorded and it would be hosted also on the website of the committee. So from there also you can actually have a relook at it and understand whatever we have discussed here. But this is one such condition that you need to take care of before taking a trade. Gradually, it may happen so that after a certain period, you may not be requiring this kind of say a table as well, or you may not be requiring this kind of point to be checked as well. Ho sakta hai kuch points you can actually skip and take a trade, but then you have to be a pro for that matter. But while you are novice, while you are actually taking trades, when you are not so proficient, then you have to refer this and understand whether the view as a whole is bullish or bearish. Very important, right?
The question may be coming in the mind, where there is a one seller or one buyer, or 100 seller, 100 buyer, the contract is 1 or 100. Okay. So a question may be coming in the mind, when the buyer and seller are same, 1 or 100 or 1 lakh or 2 lakhs, then how the price is increasing and how the price is falling. It may be a question in some people's mind. Actually, we cannot interact. That's what I'm telling. Whenever the view of the people, the willingness of the people are demanding, that means the buyer are in the buyer side, heavily buyer side. That means they are interested to buy the stock or trading instrument in higher price. Automatically, their open interest will go on buying side. Similarly, the price will be go up. Suppose, for example, just I'm giving. Suppose we are going to the vegetable markets, and the price of the tomato, potato is sold by the market at 50 rupees per kg. Where there is a demand, supply is less and demand is high. Automatically, the price will go up. Automatically, the seller will sell the potato, instead of 50, it will increase 60, 70, 80, 90, 100. So people are ready to buy. So definitely people will go out buying in higher price. So in that way, market price goes up. I think you got my point.
So basically, the entire thing boils down to this table. And if you refer this table, this is there in the public domain. You might find it on Google as well. But the only aspect is to apply it before taking a trade. Very important that you do it before taking a trade. Now, coming back to the screen wherein we actually jumped here. So I'm just coming back to that particular screen just to go back. Yeah. So these are the common issues or the concepts that we are going to discuss. We are actually discussing those. Now, open interest interpretation is done. Choosing correct instrument and its strike, very important. So I think rather than taking this on a screen and discussing, we can actually discuss it here and make them understand what it is.
Actually, in option, choosing an instrument is very critical and very difficult also. But the simple thing is, we are not going into broad, just simply we'll tell how the things can be made simply. Whenever going in option, the trading instrument should be a liquid one. Liquid means there should be a sufficient buyers and sellers, and the tick price should be as much as less possible. Suppose हमारे Indian market में tick size is 5 paisa only. Whenever we are going to in the option Nifty, so definitely the tick price is very low. But whenever you're going to a stock which is not liquid, you will find a tick price maybe 50 paisa, maybe 1 rupees, maybe 2 rupees. So in order to find out a liquid instrument, it is better to go for Nifty and Bank Nifty. Similarly, if you go for choosing a stock, Reliance, I think Nifty 50 stocks, Reliance, ICICI Bank, then Tata Steel, like of stocks is very liquid, and we can prefer to trade in that stocks.
So now just summarizing whatever he stated, the only object here is like obviously as example given by him of the markets. So you go to various vendors, vegetable vendors, and you buy right kind of say commodity that you require. So in his example, there was a potato. So taking that example, there are hundreds of potato sellers, but you actually want the right kind of potato with the right taste as well as right price, right? So here also, if we actually apply that analogy here as well, it is very important that we understand what kind of instrument. So instrument will not be discussing, it's Nifty, and for starters, definitely it's Nifty. If you are actually trading into markets for some time and you understand these aspects, then you can definitely go for stocks because stocks are little more riskier. Why I say so? Because there could be some news specific that is coming for the stocks. Also, as I said, stocks have compulsorily settlement say obligation, which is in delivery mode. Even there are brokers who are charging a higher premium, higher margin rather, when it comes to expiry of those stocks. So it's very important that you understand these things very very aptly. And I see something in the chat box from the moderator. There is a request that we should say explain the open interest concept once again. I think we'll be covering that. Just give me a couple of seconds because since I have to roll down and go to the next slides, I'll just cover this slide and cover the open interest once again. Rather, we'll be covering the open interest while we'll be taking the examples. So real life examples, I'll cover the entire perspective of open interest, say taking examples rather than putting it on screen. Because theoretically, I can explain you anything and everything. But when it comes to markets, actual live screen, if I'm able to explain there, I think that makes the point well, say on the spot, on the actually the right spot. So now coming on to this aspect of liquidity and risk, as I said, stocks carry inherent risk of news, inherent risk of actually delivery obligation, and also the margins turn up higher when it is expiry, monthly expiry for stocks rather. But when it comes to index, the liquidity is high, impact cost is low, and here the risk of delivery is not there, as well as the margin pressure is also not there. Now, risk. Sir, I think we need to explain this on screen. I think I'll take this again when it comes to open interest and this choosing the right strike. So I'm just jotting this down, and when I'm coming to the screen, I'll definitely cover this, how to choose right kind of instrument and right strike. So strike and open interest. Yeah. Fine. Now, the next aspect here is premium calculator. So I think since the audience is chartered accountants, they understand these things very well. So should I explain this?
Yeah, sure.
I think we need to understand a very important aspect, that is premium. Likewise, when I discussed the insurance example, what we do is there are not many insurers there. So if I have a car, which is say my value of the car as on today is at 10 lakh rupees. So what I do is I go to some insurance, say insurance companies, and they offer me various premiums. So what do I do? Sir, if someone is offering me 25,000 rupees for 10 lakhs, they want me to pay 25,000 rupees. And there is other person who is actually offering me for 20,000 rupees. So obviously, what is the case? Obviously, I'll just look at the policy terms first. If the policy terms are matching, whatever is cheaper to me, I'll prefer that. So here also, you have to understand whether the option is actually trading at a right price or not. Whether it is a fair value, it is say over and above the fair value, or is it trading below the fair value? And for that, at times I'm telling you, or rather, if you are a novice, you should actually try to understand whether the market is what the market is giving you signals here, right? So premium calculator, I'll share the screen. I'll stop sharing here and share the new screen rather. So I think it is on the screen too. Yeah.
You have to go for a best price. Actually, in market, what people says, it is a good price, it is a bad price, it is a fair price. It is not like it is a best price. That means whatever price you are buying that instrument, you should be best one.
So there are lot many premium calculators that are available online. We have chosen one, which is from a broker. We don't intend to say promote that, but this is something which is very easy to understand, and that is the reason we have opened this. So Nifty currently is 2970, right? I want to understand what should be the option premium for a strike price, which is 21,500, right? Expiry date of this monthly contract is 28th of December. Now, if I want to see this for weekly, I have an option. So I just put this 14th of December, right? Volatility. Where do I find this? So on NSE website, you actually find the volatility of various instruments, be it an index or be it a stock. And from there, we have derived that normally Nifty has a volatility of somewhere around 10 to 15%. So 15% normally Nifty is volatile in a year. So here that 15% figure is applied. And if you try to calculate, we get this premium of say 14 rupees 68 paise for 21,500 strike price call option, and Nifty currently is at 2970. So now we have to just check whether that price is there or not. So I'm coming onto the option chain once again. This is 14th of December expiry option chain. This is 21,500 and it is trading at what? 7 rupees 40 paisa. And what we got was
screen. It's still the presentation which is visible.
Is it?
Yeah.
So screen 2 is not visible?
No.
Just a moment.
Yeah.
Is it now visible? Screen 2?
Yeah, very much. Thank you.
Yeah. So I want to this option calculator screen. I have put the spot here, which is 2970. Yeah. 21,000 is a strike. I put the expiry here, which is 14th of December. And volatility somewhere 15% annual volatility. How I came to this figure? So NSE actually provides you this ready-made data. I have taken from there. If I have to put this in a perspective, around say 15%, so 1 or 2% here or there, the volatility is normally in Nifty at all times. So I'm considering this as 15. Interest rate currently is obviously 7%. So if I put a calculate button here, I'm getting this price, which is 14.68. Now I'll just change the expiry for you, which is 21 of December, 21st of December rather, 15% volatility and 7% interest. I just put this as calculate. Here I get a value as 65.38, right? So I hope this is visible to you all, 65.38. Now I'm coming on to the option chain again. And here this is 14th of December. I'm putting this as 21st of December. And now I'm coming back to the chain here and trying to see what is the premium that is actually trading. So actual premium trading is 31.65. So considering this, volatility is what? Sir, volatility is what? It is not just one side, upside. It is up and down, up and down. So as of now, the volatility is less. The direction is more or less clear. So volatility is actually reduced. So if I consider this as 10, okay, if I consider this as 10 and calculate, it comes to 90. But the premium is around 30, somewhere 35, right? It is 31 rather. So 32. If I consider premium as 32, the volatility, if I keep on adjusting and I put this as 12, so I'm coming on to that figure. So now Nifty is assuming a volatility of 12. I'm reverse calculating. So if you want to calculate the premiums while you are taking a trade, right? So you have to keep this 12% volatility in mind right now with 2970 as the spot price. If you want to now calculate for 21,300, and I just put this and calculate it and I just check it here. 76 rupees is the premium, 21,300. So whether that is there or not, it is 69. So actual value could be around 76. और थोड़ा सा फर्क पहले भी था. There was some difference earlier as well. So 12% is more or less settled kind of volatility.
Volatility cannot be measured exactly.
Yeah, it cannot be measured exactly for sure, but definitely it plays a wider role. How we'll also cover that. But since it plays a vital role, so we have to understand this, that while taking a trade, whether the premium that is being quoted in the market, is it near the fair market value or not? Now, premium calculator, how it is used. So firstly, if I'm buying it today at around say 69, this particular strike price of Nifty call, and if I expect that this market would go beyond this, my break-even point would be what? As we already stated, 21,300 plus 69 rather. So it is around figure 21,379, 370 rather, right? 21,370 is my break-even point. So beyond that point, if it goes on this particular date, if it closes, I'm into profit. And even before that, if it crosses that level, obviously my price would increase, because price is component of what? Two values. So now I'm coming on to this particular aspect. Premium is composition of two values. One is intrinsic value and other is time value. Very important. So time value is what and what is intrinsic value? I'll explain you here on the screen itself. So coming on to the option chain once again. Now coming on to this particular level, that is 2950.
Understand, it is very, very important.
Very important, because options mein agar koi cheez very important, that is understanding this breakup beyond all these aspects. But this breakup is something that is very basic and you have to understand this aspect. So 2950 is quoting at what? This is 21st December. It is quoting at 226, right? So what is that value that is 226 here? Because it is trading at the spot level, at the money. Spot level is around 2970. Spot level is just 20 bucks up from this level. So intrinsic value is what? Just 20 rupees. How it is 20 rupees? Because spot level has crossed the level of at the money contract here by 20 rupees. So 20 rupees is the intrinsic value. But what is it into this value now, which is trading at 226? So volatility comes into picture, right? Time is there. Obviously, time is there. And that is the reason this component of time is here into this particular price. So actual price of this contract should be 20 rupees. But since it is already 1.5 weeks to go till this level, there are say almost like 11 days, working days, and trading days could be around what? 5 plus 3, 5 plus 4, right? 9 days. So still 9 days to go. So, and market is again in the uptrend. So direction is again up. So that is the reason this is quoting at this particular price. So 226 may say intrinsic value is just rupees 20 and time value is 206, right? I hope you understood this aspect. Premium is actually a component of two aspects, intrinsic value and time value. Whatever premium you see, you have to understand and calculate. So you have to calculate what is the intrinsic value. Intrinsic value, when it crosses that particular level, that is the difference between those levels, that is 2970 spot level minus the level that we are seeing. So if we see the 2900 kind of strike, the intrinsic value here should be what? The answer should be 70, because the difference is 70. So 70 is the intrinsic value, and what the price is quoting here is 258. So I've just reduced 258, 70 rupees from 258. 188 is the time premium here that I'm paying for this contract.
Higher side, because people are interested to buy at that premium.
Yeah. So as given as example that he covered of potato. So here people are ready to pay higher premiums because the market is directionally on the upside. And that is the reason calls are trading at a much higher premium. I hope you understood this, right? Now, coming on to the presentation once again, we'll be just toggling from here to there, and I hope you don't mind, because if you understand things in right perspective, that is the basic object of the session, right? So I hope the presentation is again visible to you all. Now comes a topic which is called understanding Greeks. I think till this point, these were the different issues. These were the different aspects which were to be understood. Greeks is something which people, if they are trading on and off, they might not understand. People who are trading like pro, they will definitely appreciate. And these aspects need to be understood. Greeks are mostly 5 Greeks, and we have a separate slide for that. So I'll cover Greeks first, and then we'll cover these remaining 3 aspects as well. Yeah. We have covered this moneyness part, ITM, ATM, OTM. This is for put and this is for call. Open interest we have already covered. We'll be covering once again open interest on specific demand, specific request. Greeks. So there are 5 Greeks in market. Rather, these are the 5 Greeks, and these Greeks are actually a part of Black-Scholes model. So Black-Scholes, and there was a third person as well. So they actually defined these 5 Greeks, and they derived that options premium is actually a component of all these 5 Greeks. So I think you can add some more value to whatever I said.
Options consists of mainly, actually in Greeks there are 5 components, but option premium mainly consists of 3 components. One is delta, vega, and theta. These are the main 3 components which drive the option premium mainly. But if you go into deep, then it takes lots of time. That we don't think we have much time to elaborate all these things. So, but main thing is that delta, vega, and theta. These are 3 components which drive the option premium mainly.
So I just try to elaborate and make you a little more conversant with what we are discussing here. What Greeks and in specific delta means. So delta means what? Say right now Nifty is trading at 2970, real life case study here. So if we are choosing a strike which is set 21,000, and we now expect that this particular Nifty would be going to would be actually crossing 21,000 and going beyond that level as well. So delta here, if you just read it, measures change in option price when stock price moves. So there is a change in the price of the particular underlying, which is Nifty, and when that moves, and if we actually keep that strike in mind, that is 21,000, that particular strike will have certain delta. It means, in turn means that if we come onto the screen once again, this screen, and I'll be able to show it to you much more in a better manner. Yeah. So I hope this second screen is visible to you all. And here, I'll take you through one of the option chain, which is a subscribe kind of version. I don't promote this. I'm just telling you that this is something. This is a tool. So you may get these kind of tools elsewhere as well. This is one such tool that is I am using. So here, this is the option chain, and here you see again, this is a very clear option chain compared to what we have seen on the NSE website. So here 2950, and this is again an option which is expiring on 28th of December. So I'll just shift this to 14th of December right now. So now we'll actually discuss only 14th of December and not beyond that right now. So 20,950 option chain. Here the Greeks view is there. There are 2 different views here. So LTP, that is last traded price view, Greeks view, and there is all column view. As of now, I'm on the last traded price view. So 2950 and 14th of December, last traded price is 148, right? This call option. Here, if I see the Greeks view, 2950, 148 is the last traded price. And if I see the delta here, the delta is 0.55 of 21,000 strike. 2950 is the spot level, somewhere close to that. This is spot level, and 21,000 the call level. The delta here is 0.55. How it is derived, I think this is not the right occasion to discuss all that. But just to make you understand what this 0.55 means, that every 1 rupee appreciation in Nifty. So if Nifty is 970, assuming this Nifty as 970 and going towards 21,000, every 1 rupee change in Nifty would impact this premium of this particular contract, that is 21,000, by 0.55. So what does that mean? That if Nifty is 2970 and from there it goes to 2975, that is 5 rupees the Nifty has actually appreciated. So what price would this particular 21,000 call option appreciate? So 5 into 0.55, it is 2.75 rupees. So this 117 would now change to plus 2.75 and it comes to 120.25. So if you try to apply this in real life case study, you will see that this is actually happening, that from 117.50, this goes to 120 kind of levels. And if this price appreciates from 2970 to 21,000, so there is a jump of 30 rupees, 30 points rather. So 30 points into 0.55 converted to rupees. So it comes to 16.5 rupees. Adding 117 premium, which is the last traded price, it will be 134. So 134, this will be the new value when it actually approaches there. Now, would I be very perfect in stating that this would be 134? Not really, because delta is one such factor that is impacting premium. There are other factors as well. One is theta, other is vega, and the gamma. But important are three: delta, theta, and vega. So there is actually other component, which is theta, and I'll explain that here again, and vega as well. So delta, I hope you understood, which is mentioned here. 0.55 is delta that is mentioned. So 0.55, every rupee change in Nifty, gradually when it goes near to that strike or above that strike, this 0.55 would be the appreciation in the premium, right? I hope you understood this part. Now coming on to theta. So theta is what? What is theta, sir? So basically it is actually time value. Now, as sir rightly stated in the very beginning, options are actually wealth destroyers. This is a common feeling. Why? Because they are depreciating asset. And what is that aspect that is depreciating? The time. Because time is elapsing, time is actually decaying, and that is the reason it is called a depreciating asset. So even if there is no movement in say any in the market, this particular premium of 21,000 will gradually reduce by what? -8. So if this market stays at this level, which is right now 2970, say on Monday market opens, goes from 20,970 to certain level of 21,000, and then comes back and stays at 970. At the closing itself, it is 970. Then the premium would be reduced by 8 rupees. 8 rupees. -8 is given here. So 117 minus 8. 117 minus 8 would be 109. So somewhere around 109 would be the premium on that day. But again, delta would be coming into picture. So premium would be impacted certainly by some delta aspect as well. But theta, considering that these conditions are not there, there is no change in the price, it will definitely reduce by 8 rupees. So theta is calculated and put up over here in this option chain very clearly. And you can see that actually you can calculate this, that if it stands here, what would be the reduction in the price. I hope you understood. Similarly, put options, I'm not covering put right now because I don't want to confuse you. I can very well cover puts, but unnecessary making that the complexity more complex is not the case here, right? So already I think when we are discussing, we realize this, that we had been discussing physically with students which were say sitting against us, and we were explaining these things. So there was a lot of confusion, but not to confuse you much right away in this first session. If there are many sessions in future which we can take at the advanced level, we'll definitely try to say put more things into perspective. But right now, I think this is it. So now coming on to Vega part, and this screen is visible to you here. And again, the 21,000 strike call option, Vega is 11. So what does this mean? the volatility is currently around 11%, somewhere 11%. So it actually calculates volatility, and accordingly, the premium that would actually be impacted would be this particular part, that is 11% Vega. So I think combine all this. If the Greeks are understood well, then and then only you can trade better. What happens is, giving you a real life example, say one of my friend, he bought this particular contract of 21,000 when Nifty was actually trading at 20,000 odd levels. He bought this, he was very bullish. He was very bullish and he bought this and he said that this is an out of the money contract, out of the money call option. And I'm definitely say perceiving that Nifty is going from 20,000 levels to 21,000 levels. But then he didn't understood these aspects. So what happens is Nifty went in a very short span from 20,000. We all have seen. I'll show the charts also in case, yeah, here. So we are onto the screen here. This is a daily chart of Nifty. And I hope this is clearly visible to you all. So this was a day. This was 30th of November when Nifty was around 29th of November when Nifty was around 20,000 levels. So he actually had a, say, opinion that this would definitely go to 21,000 levels. So he bought this contract, and if he is holding it till now, so at that point of time, what was the premium? We have to go again here on the option chain, and we have to actually say, try to put it on a chart. Why chart? Because then and only then we will be able to understand what was the premium that time. So I'm just putting it on a chart. This particular 21,000 kind of strike, the premium of that. So on this daily chart, the premium is visible here. And on 29th particularly, so this is 1st of December. So 29th, it was trading at around just 7 rupees. So from 7 rupees, his premium now is 117 rupees. So just risking 7 rupees, he has actually gained almost like what? 7x, 8x kind of returns here, or even more than that. So 7 to 8x or 9x kind of returns in a span of what? Almost 7-8 days. Now, no one actually knows where the Nifty will go from here. Obviously, it was a free trade. He just took it and Nifty went up. But if he's still holding it in the assumption that he will be gaining more returns, but if it doesn't happen so, at 21,000 levels, this premium right now is 117, right? And this is expiry of 14th of December. Till 14th of December, if it stays here, the entire premium will go. It will actually vanish, and premium graph will then go down, down, down. It will be actually zero. The premium will depreciate in next 4 days if it doesn't go any further. So this needs to be understood by the people, by the persons who are trading it. If you don't understand this Greeks part, then you will be losing all the money that you have already gained as well. So very important that you understand the role of Greeks. And I hope we have we actually have spared good amount of time here because there are many areas that we need to cover. Sir, anything that you wish to add here?
You see, by putting 7 rupees premium, 7 into 50, 350, 350 we have paid, we are gaining 7 to 8 times. That's why this option is a gateway to wealth creation.
Right.
The word you are using, it is a gateway to wealth creation. If somebody is trade in this way, so definitely he can create a good wealth market.
Right. Friends, we are coming back to the slide wherein we actually left you and we jumped here. Yeah. So, sir, now Greeks is somewhat clear, not entirely, but if the participants wish to read, wish to understand, they have to get deeper into it and understand this concept in a better manner. Now, coming on to certain specific observations and our trading traits that we follow, and what is our experience of what exactly timing means here. So entry and exits is something that is very important. We'll be covering that in a little detail in next slides. But here we are discussing here certain aspects, which is best time for trading in options. So sir will be covering this. Sir.
Yeah, actually what happened, this is most of the interesting, everybody trying to know okay, what is the best time to trade in the market. The question is that right entry, right stock and right price. This is most critical factor to be considered while entering into a trading. Generally, as per practical experience, Nifty moves in the morning in any direction, it may be up, it may be down. From 9:32, market is opening at 9:15. From 9:30 to 10:30 or 11, you always find a good direction. It may be up, it may be down. If it may be up, then you can go for a call buying. If it is down, you can go for a put buying. This is the best time to trade in the market. Similarly, at around 2 p.m. to 3:30, market gives a direction. It may be up, it may be down. So accordingly, you can have a very good trading opportunity to make your money as a multiplier. So better in Nifty. Similarly, I am talking about the Nifty, I am not talking about any stocks. You can also write the same thing. Suppose market is up, you can write the put. If market is down, you can write the call. But the call and put, whatever I am writing, it will come later on. It is just, it will be, if I tell right now, it will be confusing. So best trying to trade the option in morning hours, that is 9:30 to 10:30 or 11. And the latter part, it is 2 p.m. to 3:30 p.m. You can just don't try, but don't try to trade, but just observe the market, how whether the market is moving in that direction. The most of the time, you will see the market is moving in that direction.
So basically, if I sum up whatever sir has said, 9:30 to 10:30, wherever the market is, in what direction it is, if you just understand here, by 9:30 that market has actually stabilized. First 15 minutes, market has already traded and it has stabilized and it has started moving up. So then you can take a position in that direction. If it started moving down, then you can take a position accordingly to the market sentiment. And similarly, 2 to 3:30 p.m. is the time. Now, sir, can we explain this somewhat in a chart? So let's try to. Yeah. So here.
Make it 15 minutes.
Now, sir, there is a common question that comes up, that what time frame do we choose on a screen, on a chart screen specifically, to trade and analyze? So I think, shall we share the secret juice?
Yeah.
So there is nothing like a secret in the market, but yeah, obviously there are certain observations, there are certain experiences that we wish to share here. So 15 minutes chart is something that you should be looking at when it comes to intraday trade. I'm just reiterating whatever I've stated right now. 15 minutes chart, 15 minute ka chart is very important, and you have to keep that chart in mind if you want to trade and if you want to have an intraday trade, right? But in case you want to trade for a full day, rather a swing, because 15 minutes, the movement would be very fast and very furious, and you have to be on your toes. So if you take a position, intraday trade, you get some profit and you should be out. If you're not out, you tend to lose. So very important that you should be keeping this aspect in mind, that it's a purely an intraday trade, and you have to have your risk reward defined. If you are defining your risk reward, your stop loss levels, your key exit levels and entry levels both, then intraday you can do it. But if you're not an intraday trader, you cannot spare that much of time. Then obviously people go for swing trades or positional trades. So active traders, 15 minute charts, that is for intraday. Slightly less active, I'll call it slightly less active. Swing traders, they have to have 1 hour chart in mind. So now, sir, we are on to this chart, and 15 minute chart, and this day starts from, yeah, just open. So it was 8th of December, right? And this is 9:15 a.m. ka candle. So this is first candle, which actually will not discuss candlestick here, but we'll just assume that people understand this. So this is a green candle, which means that market has went up from the level which it has opened. So now here, what would be your trade and at what strike? Because we wanted to cover that strike aspect as well. So what strike you will be trading in, and what would be the exact trade?
Yeah. The candle, we are taking the candle 15 minutes, 15 minutes. So that means whenever I am going to trade from 9:30 to 10:30 or 11, so definitely I will try to observe the market trend for the first candle. That is 15 minutes. Whenever the candle closes, that strike price I will consider. That means nearby that strike price. See,
Sir, it has closed at 29.50.
950.
Exactly. This level was high was 972. So high was 972 when I'm on this candle, and we can see it here. Huh? We can see it here. Should I draw this, Samandeep? Is it visible to you, or is it visible to the audience?
Yes, sir. The trading view is visible.
And trading view, as well as there, the cursor is here, wherein there is open, high, low, close.
Yeah, OHLC, yeah, sir. It's showing up.
Yeah, OHLC, right. So
Yeah.
OHLC here on Friday, 8th of December, 9:15. This was high was 972, low was 932, and close was 958, sir. 959. So
Yeah.
considering there's 960.
So I will go for 20950, 950
ATM call.
ATM call.
Okay.
If I go for ATM call, then you see what premium what I have bought and what premium I exit.
So I'll just try to put that also on a perspective with taking this as a 950 ka chart.
Yeah.
So we have a chart also. We have the option to load this chart. So now I have to put this as a 15 minutes chart, right?
Hmm.
And in this 15 minutes, first 15 minutes, I am on this 8th, and this is the candle, right? So this is it the candle? Yeah, 915 candle. So this 915 candle, the premium, open premium was 150. It went on to 153. Low was 134 rather, and the close was 144.
That
Yeah.
means we bought at 145. The early closing price.
Yeah, closing price was 144, 145 something. Yeah.
Then how much high it was gone?
So till 9:30, 9:45, and 10:15, and this is 10:30, 10:15 wala candle. So this actually closes at 10:30. The high is 167. So you entered at 145 and you exited at 167. Should this be the inference?
Yeah. This is a small trade, huh? This is a small trade. Because I found that the stock will fall down there. That's why I booked my profit and I get out.
This is the index. So index should
Index.
So basically, if you try to say put this in your observation list now, that in 15 minutes trade, rather 15 minutes kind of chart, if you see the Nifty and then you see that in 15 minutes, first 15 minutes, just here, about here. So first 15 minutes, the Nifty was up, right? So since it was up, when it closed, the ATM call was around 145. You took that position, and by 10:30, you exited that position, whatever the premium was there.
165.
Now, sir, in this situation, what could be the stop loss?
Stop loss is net. The stop loss will be here only. At the bottom of the that.
So the same candle, 915 candle, the low of that candle was around 932. So that level would be the stop loss level.
No, just below, just below.
So just below where?
Yeah.
Where?
Just up, down.
This one.
No,
This one. This one.
my stop loss will be here.
So you mean to say somewhere below this candle,
Yeah.
but not exactly the low. Now, sir,
Just below low.
so what is the reason you have took this as a stop loss?
Well, this is a technical analysis that cannot be explained right now.
Okay. So you mean to say that this is part of another analysis, which is a technical analysis, but there was some support level here, which if it breaks, then it would go further lower. And that is the reason you have chosen this kind of level as a stop loss level. So, but then this is very easy trade that seems visible here. Can we see some other days as well, like 7th, and just try to analyze whether this is possible to take a trade? So every day you may or may not get a trade. That could be
Every day we'll get it trade. Every day. But thing is that how we are visualizing the market. That is important.
Okay. So here on 7th of December, this is the first candle. First candle, it starts here, that is 29.40 and ends at 28.50 somewhere. It was a red candle,
Yes,
so it actually fell.
Yeah.
From here, what you will do, sir, as a trade?
But people think that first candle, as per rule, whatever we discussed, the market should fall. But the question that there is a support from previous day. Previous day low is that figure. That means there is a support. We have to wait for that. If that breaks, then it will go down. Otherwise, it will go up. The same thing happened here.
So I think what he has stated, I just wish to sum up that one aspect is if you want to trade just looking at options, then candles, if you see the candles and if you try to trade, not applying any further technical analysis aspects, then you can take a trade like this. But if you understand technical analysis aspects in a say in a better manner, I think here you would have avoided the trade.
Yeah.
Right now, taking this further one more day, and I think then we can move on further. So now this is 6th of December. The first candle, 15 minutes candle. It started with the close was 29. So the close was much lower, but it opened gap up. So it was 29.30 somewhere where it opened. It went on to 29.09. So it actually opened up
The market constant for at least 1 hour.
1933. So it went on till 1934 somewhere. The round figure is 1934. So 11, some 5-7 points up. So here you took a trade. You were waiting till 10:30. So 10:30 it went lower. So it was actually lower than the price that you entered.
No, that I have to wait. That I have to wait because the market is falling now. Then I have to wait the closing of the previous day. I'll wait for that figure. After some time, then the market come down to that figure. Then it is gone up. Then at that point, then I'll buy.
Okay. So basically, say the rule says that, if the candle is up, clear up, then you have to enter, or clear down, then you have to enter. But again, you have to mix the rules of technical analysis here and then take a trade, right?
You have to apply the TA. Otherwise, you cannot trade. It is very simple to say, but whatever we are saying, whatever in our mind by taking the position is something different. We are trying to understand what is option, but how the figure comes and why, what, how, when. This is most important. Without knowing the things, we should not put into the finger into the fire. This is the stock market trading is just like sitting in the fire. So whenever we are sitting in the fire, that means we should know how to extinguish the fire. It is very simple.
Right. Now, sir, coming on to the next point, I'm just shifting the screen from this to this, the presentation screen. Now we are on to the next point, which is 11 a.m. trading rule. So what is that, sir?
11 a.m. trading, that means market will be in a particular range bound after 11 to 2 o'clock. That means we can write our options because option is depreciating asset. If the market will not move, definitely there is a time decay in the market. Then time decay means you are falling in the option premium. That you can gain.
So basically, what he means to say is between this 9:30 to 10:30, or rather 9:30 to 11, you can just say 9:30 to 10:30, rather 9:30 to 11. Whatever movement market makes, after that the market goes sideways, and sideways when market goes, writing is the best option. Why? Because as we applied the Greeks and we understood that when the market is not going anywhere, the premium, because of the time decay, it gradually decays. Even the volatility falls, and even the delta is supporting because it is going nowhere rather. So delta, theta, and vega, all the three actually favor the decay, and that is the reason the writing part can be done here. That is leveling. Now we will actually again come onto the screen and try to explain you on the screen whether this is how true it is, how we can actually then understand on the screen whether it is applying or not.
But same date is not happening.
So every day we can just take the 3 days example here again. So 8th of December, this was the candle, this was a candle, 10:45. So 11 a.m. it closed here, and market was closed, actually this point was 29.76. Okay, now here, sir, what strike you would be entering? So we actually have to discuss the strike as well. So again, the ATM strike. So you'll be writing an ATM call?
Either ATM or OTM.
So ATM or OTM call?
OTM means the
higher side. So basically, out of the money calls, you can actually start writing because the market is gradually falling. So out of the money call, so we just need to be here on the screen. So we were at 29.50 when the market was at this level, opening level. Again, the market is there itself, 29.76. So again, ATM is 29.50. This is slightly OTM. 21,000 is slightly OTM. So what call you would be preferring to write? So more the better. So you can actually write a 21,500 call to be on a very safer side. But because
I don't get any premium on that.
no, because the premium again here was on that day 55 rupees.
But it will not fall substantially.
Yeah. So something that we need to understand is the Greeks actually work very well when it comes to arriving at strikes as well. So choosing the right strike is important. So we have to have a good premium considering the Greeks as well. So what choice would be there in your mind when it comes to choosing the strike? What level you will be choosing there? So top candle, it made a high of 21,000 exact 21,006.
Yes, I will go for 21,000 or 21,050.
So 21,000 or 21,050. I'm just coming on here and 21,050. 21,000 was this and 21,050 is this. I'll just put up the charts, both of charts here for a deeper understanding. So this is 2950. I'll just close this. This is 21,050. So we'll just take this this particular strike now. And 15 minutes. So 15 minutes on 8th of December. It was around 11 a.m. So 10:15. Yeah, this is 10:30. This is 10:45. So you will sell this, right? The premium, sir, was at close was 95 rupees. So 95, you sold this. And what would be the covering point?
I'll wait until 1:30 or 2 o'clock.
So that is the time the volatility actually creeps in. So as we stated, best time for trading buying side is 9:30 to 10:30 and 2 to 3:30. So before 2 p.m., we can actually exit the writing trades. So this is an intraday trade, right? Specifically. So now here, I'm just coming on to this. So it was 95 until 2 p.m. The price was around, the close of 2 p.m. was around 62 rupees. Yeah, this level. This is actually 215. 2 was here. 130, 145. So this closed at around 55.
I'll leave it there.
So you actually you wrote this, you actually sorted this at around 95 and you exited this around 55. So this is a good trade, went positive for you. So now I'm coming again onto the presentation here. Now 2 to 230 will not cover. We'll actually go further because we have lot many areas again to discuss. So 11 a.m. trading rule, I think this is understood because we already covered this here. And Hero Zero trading. So what is this?
Hero Zero trading. It is a very popular trading in the market. Hero Zero means we are buying a particular strike at a very low price. Say it can be 5, it can be 10, it can be 15. But we anticipate that the price will go up to anything. It may be 100, it may be 150, it may be 200. This is called Hero and Zero. But most of the time, it not happens. Suppose in a market, if you consider for a month, it will work only once or twice. Baki rest of the week, it may not work. Suppose it works only once in a while, it will cover your entire losses and it will give a dramatic profit.
Okay. So just to explain more what is stated. So Hero Zero trading is such wherein you actually enter a trade which is on expiry day or near to expiry day. So here we are talking of 14th of December. So we would be taking a trade specifically for 14th of December, somewhere on 13th of December or 14th of December. So 13th of December, if in the later hours, that is near closing, if we can anticipate what would be the opening or what would be the direction tomorrow, then we can take a trade on 13th, or else mostly we'll be taking a trade on 14th, right?
You know one thing, can you open a Sensex? Can it be possible?
Yeah, possible, sir, definitely possible.
But expiry Sensex was yesterday, weekly expiry. You can see.
I'll just try to see whether this allows. Yeah, Sensex is here. So Sensex expiry is on Fridays. Nifty typically is on Thursdays, but Sensex expiry is on Fridays. So sir, Sensex is here. Level of Sensex while it was closing was 69,825, 75 points away from 70,000. It might have crossed that level as well. I'm very much sure because Nifty went beyond 21,000. So 70,000 was crossed. Now, what is the trade that you suggest? Hero Zero Trade.
Just open the chart.
Which chart? Rather here.
Sensex.
I'm not very sure whether Sensex chart would be available here. Let me try. Sensex ETF. Where was it? Syntax. That is Syntax. Sensex, I am really doubtful whether the chart is visible here. Just a moment. I have one more screen wherein I can actually put it. But I think on this screen itself there was a chart here. Yes, sir. So this is an hourly chart by default that comes up, and I'm just turning it on to 15 minutes. I hope this screen is visible to you all. The screen 2, the chart screen. Samandeep,
No, sir.
are
The
you there?
only no. So only the presentation is visible as of now.
just a minute. I'll
Yeah,
just
yeah.
shift it. Yeah. So we are on to the Sensex chart now. I hope the chart is visible.
Yeah, Sensex chart is on the screen along with RSI. Yeah.
Yes, sir.
Yes. This is the expiry day of the Sensex on Friday. Then when the market is down and we anticipate that market will go up, then we buy there this index, this strike price.
So what is this time that you have entered around 2 p.m.? So now we are covering this 2 p.m. part as well, 2 to 3:30. So 2 p.m. This was the chart. So it was actually trading at 69,600 somewhere, and it closed at 2 p.m. at, I think this was the chart. This is the candle, this particular candle. So this is 13:45 to 2 p.m. It closed around 69,600, 582.
But I have taken 69,500.
So 69,500 on the ATM level. Yeah. So ATM 69,500. And sir, what expiry you have taken? Yeah, so it was 8th of December, but here we don't have the 8th of December chart. We have the future charts. We don't have the past chart. But I think from here we can just try to visualize what would have been the option premium. So can you just tell me the premium that you have entered?
Yeah, 105.
You entered at 105 and exited at. And what is the contract size, lot size? 10. So Sensex trades at 10 as a lot size. So he entered by risking his what? 1,000 rupees? 1,000 rupees, and it made you what? 3,000 plus.
No. Yes, it is. It gives us 3,000 rupees, but I have entered it on the 1.
Okay, right. So this is around like 2. This is at 2 p.m. Where the movement was very clear that it will be going up. It may go down, but sir, in this case, if it goes down, if the market is really volatile and it goes down choppy, then what would be stop loss?
50.
So 50. So seeing at the chart, that is something. So 50 rupees on the premium side. So you have taken that as a stop loss.
But I know that the market will not fall because all the markets are moving. Nifty, Bank Nifty, Nifty, everybody moving. But that Sensex will move.
Oh. So I think this explains. We'll be coming back to the
part of technical analysis actually. I am so sure that market will go up.
So technical analysis actually helps you to gauge the direction of the market. But since we are talking about options right now, so what option to enter? The strike to enter was the ATM strike at both the points. So at both the points, what you entered is a ATM strike basically, and that too with a very near expiry. Or rather the same day expiry, the expiry date.
See, your strike prices depend upon the market direction. And the market direction is up and the expiry is very far. And you know, the market will go up to that extent, but nobody can say it will happen so. But most of the time, if your analysis is very good, most of the time you can find out the market direction of what direction it will go. So in that condition, whatever premium you are taking as a risk in accordance to that, you can take your positions. Question is that suppose I can take yesterday I have taken the Sensex 14,500. I could have taken the 49K also.
69,000.
69,000. I also 500 point ke niche I could have taken. but I have taken at the money because I have to pay a small premium. If market fall down, then max to max, I am going to lose only 1/3 rupees. That's all. So it depends upon your risk appetite and how you are analyzing the market. That is important. Important is not your risk. Risk is there is a limit of risk only 1,000. But the question is that how you are analyzing the market, in what direction and up to what direction. That is important.
So basically, friends, we just have to come back to this point, that is choosing correct instrument and strike, which we're supposed to cover. Liquidity is one aspect, and as you rightly stated here, risk. So what kind of money that you wish to risk, and your analysis will also help you decide that whether that risk is apt or not. Because at times, if you're not able to analyze, then everything is risk for you. But if you are able to analyze, and if you're damn sure looking at the charts that this would go from this level to this level, then that risk is actually a very calculated kind of risk. And there you actually are risking a lower amount and the reward could be very much higher, right? So I think we sum up with this slide now. The only aspect left out here is open interest. We'll be covering that again.
Before entering into any position, you should know your risk from the beginning. It is must. Without knowing your risks, please don't enter into the market.
Right. So now coming on to the other issues, which are a little different, we'll be covering the risk management as well, but emotional decision making. So basically emotional biases, which actually trouble people a lot. The first is mentality. Sir, certain points on this.
What is that? There are three types of analysis in the market. One is fundamental and technical, and the third was, which is not much talked, that is mental analysis. Whenever we are going to do any work, not even stock market, any work, we have to prepare ourselves mentally to do that work. That means we are ready to do that work. Unless you are not ready, you cannot succeed in that work. Likewise, in the stock market also, you have to mentally prepare. One book I'm just saying, I think most of the people know it, Think and Grow Rich by, I forgot his name, Don Hill is supposed to be.
I'll just search, don't worry.
That is a book. Just you go through that book. It will set up your mind. How to think and how to believe. Suppose you don't believe a thing, it is to be happen, it cannot happen. If you believe it is to happen, it is to be happen. That's all. So that is why you go through a book that is Think and Grow Rich.
It's by Napoleon Hill.
Napoleon Hill. Yeah, right. Read a book. Once you go through it, definitely your things will be, your thinking, the way of thinking will be changed.
So basically, mentality is something that is very important. We have to be very positive while looking at the markets. Market is a place wherein what kind of instrument, I can just give you in a very raw language the examples here. So agar aapke paas mein, I'm just quoting this in Hindi because it would create an impact when I say this in Hindi. So if you have a bucket in your hand, अगर आपके पास में बाल्टी है, तो मार्केट एक ऐसी जगह है जो समंदर है, वहां से आप बकेट से पैसा निकालते हो. If you have something like a glass in your hand, आपके पास में मग है, तो आप मग से पैसा निकालते हो. If you have something which is kind of a container with you, then you can take out money with that container altogether. So it's up to you. You have to build up your mental state, the emotional part, and that will happen with time. It will take some time to build up that part. You need to, because this is a very lonely profession. So you may not be able to share your trades everywhere, and you will not be able to talk also everywhere. Mentors also here, genuine mentors. I'm not talking about the fin influencers, but the mentors, the genuine mentors would be really lesser numbers and very few, and handy. They may not be even handy as well. So you may actually suffer with a lonely kind of state, and that is the reason you'll be in a negative state. So you have to build up that gradually. Be people who are like-minded. Try to connect with them. Try to understand what they are doing, what mistakes you are doing, and emotionally try to correct yourself. Because even after understanding everything, even after knowing all these aspects, the major trouble there is your psyche, your emotions. I think greed, fear, all sorts of emotions come into play. Greed and fear is the most discussed one, most understandable one, right? So second aspect here we are going to discuss is noise. Yeah.
This is the most important factor. Not noise. Market is full of noises. because here the people who know, they don't speak. Here the people who don't know, they always speak. This is the thing. In TV, in audio, then video, friends, brokers, stock advisors, they are just moving every now and then everywhere. If you follow those things, those are the noises. They don't know anything. Suppose somebody knows how the market is moving, he is not going to tell you anything. Simple. He will sit in the room and make money. That's all. Why he will go? Just he will share his views or knowledge for years and years. That's all. But if somebody is saying that market will go up and go down, that means the person have no idea regarding the market. Because a known person, an intelligent person, will never predict the market. He will work in the market. It is very simple. But people are mentally so weak, they believe on friends, brokers. Brokers' objective is mainly to make their brokerages, not to make you rich. The thing is very simple. They will give a call, the number of calls I am receiving, Nifty 10 points, stop loss is 5 points. Then how much you are getting? 50 points. That means you are 10 points, you are getting only 500. Out of that, their broker is getting 50 or 100 rupees as a brokerage. And you are getting 400 points. If you are lost, one trade, one loss, then means you are in loss. It's very simple. That means you have to make yourself competent to work in the market. Don't follow the noise. In every day, the new channels, they are shouting like anything, but nothing is happening in the market. Just you try. If 1 week you try, what they are saying and what is happening in the market. You just compare. You come to know the facts. So my request is that you don't fall into the influences or in the noise, etc. Just try to learn it. It will take some time, but try to learn it. Then you avoid the noises and do of your own. Then you learn something. If you are doing by some others' advice or some other things, you cannot learn. So please try to understand and try to learn the things. Then you can do any miracle in the markets.
So basically, noise here means anything that distracts you, that actually disturbs your setup. Now, so what is setup? That is a big question.
Yeah.
But we are not going to discuss out here because it actually falls under TA category. So basically, we are not discussing TA here. But if something that is disturbing you, something that is alluring you without anything fundamentally say at the background, that is a noise. So you have to avoid these kind of noises. What we personally do is something that we are here to share. So I personally don't watch any television, rather, not even during the daytime or even in the nighttime. News, we find it everywhere now. So we can actually say have some subscription done or something which we can actually visit as a website and have the news there. But unnecessarily watching the news, watching the say TV and say looking at some or other calls that are coming up distracts you definitely. Print media also at times gives you rather they also try to figure out what is happening, and in that they spread the news that they have to spread. So that is their business, because sharing news is their business and making news is their business. Talking about the headlines is something that they wish to do there. So you actually have to avoid all this, and you have to stick to your analysis, your understanding, your finally levels will work, not these things that will be actually working for you. पैसा आप खुद बना सकते हैं, आपके लिए कोई दूसरा पैसा नहीं बना के देगा. आपके लिए कोई दूसरा पैसा बना के देगा कब? जब आप उसको पे करोगे. अगर उसका कोई इंटरेस्ट है तभी वो आपको पैसा बना के देगा, अदरवाइज वो आपको पैसा बना के क्यों देगा? सबसे बड़ा सवाल. आई थिंक दिस इज द बिगेस्ट क्वेश्चन दैट यू हैव टू अंडरस्टैंड. आई एम वेरी सॉरी टू स्टार्ट दिस इन हिंदी, बट it won't create an impact unless I'm talking in that language, right? So now coming on to the last aspect of this particular issues part, sir, risk management mistakes.
Yeah.
So should I make it a little bolder? Let's see. I think I think I cannot zoom in here, but option a hedging tool.
Option is hedging. Actually, from the beginning, already we have discussed. Option was created mainly to hedge the things, but now it has converted as a trading instrument. How it is hedging normally? Option is hedged against the future or against any cash positions we have already done in the markets. Suppose we have initiated a future trading, and future trading means if it is naked, then your loss is unlimited. Suppose market fallen 1,000 points. So definitely we are going to lose 1,000 points. 1,000 points means 50,000. Simple. If there is a hedging strategy there, and considering that option, you can hedge the future with the option. That means you are restricting your loss up to certain extent. Before initiating your future position, you are restricting your loss and you are well aware of your loss. That means you have a sound sleep in the night. I am already in the market, initiated a future figure, and I am hedged my position, and the loss is well known to me. I can sleep in a sound mood. That is hedging. It is a part of technical analysis, how it is to be hedged, when it is to be hedged, when it is not to be hedged. But since we are in the option trade, option is a hedging instrument that we can done also. You can also apply hedging.
So basically, option, when it was say brought onto the table for trading, it was mostly considered as an hedging tool. So do you actually trade into insurance premiums? So I'm taking a insurance for myself and I'm paying a premium. So do I trade into that? I don't. I pay a 25,000 rupees premium for 1 crore kind of policy. So next day, if I get 27,000 premium for my own life for that same cover, would I actually sell it? I don't. But here, since we have an option, we have a screen there. As we already stated, options has many options. So that is the reason we trade here. So it was originally for hedging. It is still a hedging tool for sure, but you need to understand and apply it. If you're not doing that, then you have to understand it in more detail, because now you are trading using those options, those strikes. So then you have to be more vigilant, right? Right, sir? Yeah. Second aspect, very important again, very, very important when it comes to people who are trying to trade options day in, day out, or who are actually active traders, even the passive traders for that matter. Sometimes these aspects are very important, and that is position sizing.
Position sizing means nothing. Whenever you are trading in the F&O category, there is a lot size in the market. You cannot decide the lot. It is already decided by the exchange. Very simple. So whenever you are trading in the market, either in future and option, you should have strictly a position sizing. Suppose position is nothing. Suppose if I am working in one lot, then definitely I will go on working in one lots only till the completion of the months. For example, suppose the month is started on 1st of December, and I am not sizing my positions. Sometimes I am buying one lot, sometimes I am two lots, sometimes I am three lots, sometimes selling four lots. It will create a havoc at the end of the month. I will not be in a position to decide how fair I have traded. If I have traded only one lot for that particular month, at the end of the month, I can derive where I have done my mistake, what profit I have gained, what profit I could have gained. That thing all we can decide. That is the position sizing. Number one. Number two, whenever we are given option, then position sizing is very important. That means we should not increase our position or we should not decrease our position. We should be in the same position, because option get depreciating asset. Suppose we are going averaging the option, that means we are somewhere compromised with the premium price. So that should not be done. So if you are working in the option, the better you take a position. If you're taking 5 lots, but don't go on sizing the positions. Changing the size and all, you can say averaging also. You just stick to that only.
So I'm just trying to summarize or trying to interpret what he has stated. Sizing is very important. You should be I'll just give you the statement: one size fits all. Is that correct? No. So I can trade in 5 lots, I can trade in 10 lots, but you may not be able to, because the kind of risk appetite that you might be having is different, and my risk appetite would be definitely different. We are unique people with unique capitals, with different kind of mindsets, with different kind of abilities, capabilities, all that. So obviously one size cannot fit all. Having said that, 50 is the actually lot size of Nifty. So we cannot change that lot size on our own. So we have to go by that size for sure. But number of lots is something that is dependent on you and your capital, as well as your understanding of the market, the capability, the kind of trade you are taking. Is it an intraday trade, positional trade, the kind of margins that you'll be having to pay? So all this will decide your size, obviously. So now if you are sizing your trade, if you're trading in one lot, then keep on trading in those lots for at least a month. That's what he said. Now what happens is if one trade, two trade goes in your favor, you directly jump onto 2, 3 lots. And there you actually make a big mistake. So very important that you size your position for 1 month, at least 1 or 2 months. Gradually, when you are able to digest that, absorb whatever is happening, and then you are now at the next level, then you can size up your position or even size down if required. If you are trading in 2 lots, you can size down and trade in 1 lots if required. So, right? I hope that is clear. Now, averaging is something that we already covered with this example or with this discussion. That averaging is something that happens mostly with people who don't accept stop loss as a loss point. People are very reluctant, very much adamant when it comes to, say, compromise, or rather hitting the stop losses. The button stop loss is to be hit. So what happens is, if the trade goes negative, I just said, explained you in 15 minutes chart that these were the trades that he has taken. Sir, if the trade would have gone against you, would you still be there?
No, I have a strict stop loss. I'm exit and
So would you apply the stop loss on the screen itself, or would it be there in your mind and then you try to trade on the screen?
whenever I am sitting in front of the screen, so definitely I will have a stop loss in my mind. Okay, this is my stop loss. If I am out of my screen, then I will put up my stop loss and go.
Okay. So if you're sitting on the screen, you will keep that in mind, not apply there. But if you're going away, but then sir, at times it may happen that your stop loss might get hit also, and then it comes up or goes down further, whatever. So
Yes, I like it. But there is a discipline. In a stock market, you have to maintain a strict discipline. If it is my stop loss, then I have to exit in that area. Suppose you are for sure, your analysis said that and market will fall and will go up again. Then in that case, you can stay. Else, better is stop loss. If you are coming to the stop loss, better to exit. That's all.
right. So basically, we have covered this aspect as well, sir. Flexibility, synonym of stop loss. So you have to be flexible because at times your trade may not go your way. So at this point, people actually average.
Yeah.
They don't understand that market direction would be where, and still they try to average. So if you understand it, still it is risky. That's what I say.
Yeah.
But if you don't understand it, that is more riskier. So better to exit. So stop loss is something that should be defined, should be there in the system. At times you are sitting before the screen, it should be at least in your mind for sure. I have skipped this point. I know I'll be coming on to that point last. Expectations, income generation, and wealth optimization.
Option is critical, but don't make it so critical. Itself is critical, but we are making it more critical.
Rather, we are making more complex. Rather. So it's critical, but you are making it more critical and complex both. So, sir, last point is expectations. What to expect from option trade?
Yeah. Option trade, actually, this is a lot of things. We can expect a lot and we can lose a lot. But thing is that whenever we are expecting, we should have that much of confidence in the market to expect some positive things. For example, in option, if I say people won't believe or not, I don't know. If you start your business in the stock market in option trading with a rupees 500 only, 500, you can make it 5 crores. But to make it 5 crore, you should have a knowledge of 5 crore. That you should put into the pen and paper. You should try to learn it. Option, it is a capital market. People always say that in capital market, you use a huge capital. But it is not like that. You can start your business with 500 rupees. That means why I am saying 500 rupees. In option, you can get the option premium in that range. In 5 rupees. Suppose you are buying 1 lot in Nifty on expiry date. You already get 5 into 50, 250. You invested 250 only. On that day, you can make it 500 or 1000 or whatever it may be. That means you have started a business of a rupees 500 only. You have invested 250 and 250 keeping in your bank account. That business you have started, slowly, you can make it 5 crore. But for that, you need a lot of patience, you need a lot of knowledge, you need to be able to manage your emotions. That's all.
Basically, to sum up this point, I would say that discipline is very, very important. When we trade, we have that kind of mindset in mind. Keep that mindset that if there is a stop loss that is going to hit, we have to exit. And if you are there still holding the position, then you have to say compromise with entire premium. But then very important that you are consistent in your trades. Booking is also important. So exit and entry. Now we are coming on to that aspect, sir. That exit and entry is very, very important, because if you are consistent enough with the entries and exits both, then and then only you'll be able to make money. So now we are shifting our screen once again from this to the other screen. Yes. So here, sir, we are talking about the entry and exits, and I think just to So, sir, this is a Nifty 50 chart of 15 minutes. So, what should be the indicators that you as a trader would apply and try to say have better entries as well as exits?
Yeah. Actually, we are having many indicators in the market. You can having more than 250 indicators in the market. But the thing is that we needed to learn all the 250 indicators. Now we are just simply applying a simple indicator which can be learned by everyone. That is Bollinger Band. You please apply Bollinger Band. It is already available in the market.
So this is actually one of the kind of indicators which is readily and freely available on every chart. This is a trading view wherein we have tried to apply this on a 15 minutes kind of time frame. This is again Nifty. This was where the 8th of December, say, day began, and this was the first candle. Sir, here on 7th of December itself, this particular day, it tried to close in 15 minutes chart above this signal line, which is there in the Bollinger Bands.
That is 20 SMA. 20 day simple moving average.
Yeah. So here, if we just see the Bollinger Band, the composition of Bollinger Band, you see the inputs, the length is 20, which is an SMA. This is a signal line, which he's talking about, SMA. There is the source is closed. So this is the closing price on which this is spotted. There is a standard deviation which is applied as 2. I think this is the standard chart. If you have to understand Bollinger Band in more detail, you have to read about it on various sites. Investopedia could be one such source, open source, where you can actually read what it has gone into by building these bands. So time frame is chart, and this is what it is. So this is the composition of Bollinger Band. Here it actually crossed. So here it gave a buy signal.
So very simple. You follow the middle one. Whenever the candle close below the middle line, then you go for short
signal line.
Signal line. When it is close over the signal line, then you go for long.
So if I have shorted it after when I see this crossing here, so I have to wait till this point, right?
Yeah.
Closing of the candle.
Yeah.
So closing of the candle, and then which strike I have to enter? ATM mostly,
yes.
Or OTM will also do.
OTM can be done, but OTM is risky because you are going to give low premium. It may happen, it may not happen, but in intraday, most of the time it happens. But nothing is 100% in the stock market. Nothing. In the world also, in our life also, nothing is 100%. We have to make it perfect. We cannot get everything perfect. God has not given everything as perfect. We have perfect. If God will give perfect, then we need to do anything. By sitting in the room, you will get everything. No, it is not like that. You will get the things, you have to make it perfect. That means in stock market also, you get the things, but you have to make it perfect by way of your knowledge. That means here, whenever it crosses the middle line, then you have to go for a short.
So here it tried to go, but it actually closed up.
Yes.
Here also it tried to go up. It tried to go down and it went up. Finally, it closed up. So the inference here is you have to wait for that candle to close.
Yes.
So intermittently, it may actually do this volatile kind of action, but then you have to wait and finally wait for a confirmation to actually enter.
It hits your emotions. You have to control your emotions.
Right. So here, sir, this day when it closed up,
Yes.
would you have taken a position at the close of the, say at the very close, or
Yes.
would have waited for next day to?
No.
So you would have taken this position here itself. So here itself, ATM that was trading at around 20,915, 20,900 option you might have bought it. Okay, call option, and then it went up till 10:30. You will actually wait, and after 10:30 you'll exit, or you'll still wait.
No. I'll quit.
You'll quit because it is a small trade, intraday trade. It's not a big trade because it's a 15-minute chart, right?
Yeah.
So now if I convert this into 1 hour, now just I'm shifting the duration because we had been talking of 15 minutes intraday. I'm just shifting it to 1 hour. There is so much to do here, but I will try to, because the capacities are also a limitation, human capacity. So as and when now, since it's 8 p.m., 2 hours we had been running through. So it's slightly getting on the throat, and we don't want to hurt our throat as well. So let's see what best we can do in the available time right now. So sir, here it's very much clear. 1 hour chart. This is the positional trade. This was the day 28th of November. Bollinger Band, actually it went up even before that, even here somewhere. This candle, this was a red candle. This went up rather here. Yahan se chalu hua. This is 22nd of November. It went up, gradually it went down. This candle closed down. So can I zoom in more? I'll try to do. Yeah. So from here, this was 22nd November, around 2:15 p.m. This was hourly candle. So this actually closed at 3:15. And this was the candle which was last candle of that day, 3:15 candle. This actually is a 15 minutes candle because this hour is not complete, 3:15 to 3:30. So here it was a green candle. It crossed up, well up, and then you entered here. Say, assuming you entered here, you would have exited at this point somewhere because it is not going up and then it went down.
Yes.
So here you actually made a loss because this level was around 19,810 and this closed here, which is actually 19,775. So around like 40 points of loss.
Yes. Quickly, I'll follow the rules.
So immediately after that, the next candle again went up, but it was not able to cross. The day actually closed here. The day closed here with 19,790. The level was somewhere close to where you exited, rather on the upper side. So now next day it opens up, it comes down in 1 hour, it stays there, it doesn't cross down. You might have entered here or here. So
I'll wait till the next candle closes.
So since it was a down candle and you wanted to take a trade up,
Yeah.
trade which was up,
Yeah. As per the signals.
so you have to wait for some more confirmation because since you wanted to take up, but it was going down, you waited. The second candle went up and now it is again up from this level.
I'll enter there.
So here you would have entered and this was 19,820.
Yes.
So from there, it is no looking back. It is no looking back. It never crossed that level again until yesterday, which was a latest closing day. Here it went down. So here the stop loss got hit, right? So this is 1,000 points, sir. This is full 1,000 points.
What is it?
Yeah, this is more than even 1,000 points. So around 1,000 points for sure. And if you can control your emotions, you can stay in the trade. This positional trade, this is in very short span. So if I'm just again, this was 28th of November, 28th November, and this is what? 8th of December, 10 days, 10 working days. And of that, I think it should be around 7 to 8 trading days, 7 days, 6 to 7 trading days max. So 5 days here, 5 days there. So almost like 1,000 points. So wonderful trade here. And again, ATM option. So ATM, and this was expiring. This was near to expiry, monthly expiry. So you would have shifted it to 7th of December.
Yeah.
Then
I'll go, if I assume that I'll trade up to 1 month, then I'll go for it monthly.
So since you are looking at an hourly chart, should I understand this that since I'm looking at the hourly chart, I should go for a monthly expiry trade? Is it that way?
No. Basically, we would go for swing trade on hourly chart. But if I assume that based on my technical analysis, if I assume that the market will go for further 8 to 100 point, then definitely I will go for a monthly trade.
So even if it's a weekly trade, then you have to roll over them. Okay. So friends, this is on the screens itself. Now, there could be times when it was not that good. There could be times when it was choppy, but that is a part and parcel. The stop losses would be smaller. It is rightly stated that you lose lesser and you gain more. The weight gain should be more and the weight lost here should be less, right? So this is it. Sir, this is the first indicator. Now, is there any other indicator that you wish to suggest?
This is 16 minutes, na?
This is 60 minutes. Yeah.
After 1 hour,
1 hour is already done.
this is 1 day.
1 day. So I'm coming on to the EOD chart now, and this is for positional trade, bigger trades.
How far it is got.
So this went down from here. This candle closed down. This actually was just on to it. So we may not take a trade here on the lower side, on the shorting side. I'm just looking at the shorting side now. So this is a green candle. So I will actually wait, because to take a trade on the short side, I'll have to confirm. And if it's going up, then I'll actually not go in the reverse direction. I'll actually follow the trend. So this is not, the candle itself is not following the trend. So I have to wait. I'll go with the next candle then. And if it's again down, then I'll trade here. So this level was 19,540 somewhere.
550 roughly.
550 roughly. Yeah. And it then went down till 18,850. And this trade was taken out what? 20th of October. This went down till 26th of October.
In that case, just trail your stop loss and go on.
So trail your stop loss means what?
Means, whatever stop loss you have made, just you have to keep it up.
So now what happens is, I just want to explain what he said. So trailing stop loss means that you have to revise your stop loss and keep it, say, active. Active by that means you have to be very dynamic in your trades. This trade was going in a favor. Now you have to see that this is going down, down, down. But then where to book? So rather than booking, you have to decide a level which is a stop loss level. So sir, can we explain it here, or is it not possible right now to explain the concept of trading stop loss here?
Stop loss means just you have to keep the profit alive. Don't make a profit into loss. Simple.
Right. So in very simple terms, you need not say you compromise your profits to a certain extent, but not entire profit should be going. Now deriving at its trading stop loss will again require a technical analysis session. That's what I understand. So that's the reason I asked you. Now here it went down, it went again up, it again came down, and then it started its journey up. So if I have entered a trade here, I didn't exit anywhere here, then my stop loss, if I'm not following a trailing stop loss, would be somewhere here, which is this candle or this candle somewhere. That is 8th of November. So 8th of November is again a little lower than where I shorted. So it was 450 and I shorted at around 550. 550 somewhere, 535. So still the profit is $100 somewhere. And now from here I exited. Should I again reverse my trade and buy?
No.
So, but then the next candle was again, it goes down.
All the positions should be taken in long position above that line.
So then here theoretically saying it's very easy, but when I exited here, I would not be taking say immediately a long position. I'll actually wait and see.
No, that means you are strictly following the rules. You need not to apply your brain. Whenever you are at market, in the stock market, you need not to, if you are getting the system, for example, I'm giving an example, a pilot who is flying a aeroplane, he will land that aeroplane in accordance with the system, not in accordance with his own will. So he will not see through the window where I will land the aeroplane. He will see the system. If the system says this is the right distance between the airbase and the sky, then he will go on landing in that way only. He will not see कि window से देख रहा है कि yes मैं कितना distance आ गया, I will get it down. No, not in that way. You will simply follow the system. When the system indicates you open the wheel, then the pilot will get the open the wheel. Similarly, whenever you work in the stock market, simply see the rules, follow the rules. Don't follow your mind. You make up your mind in such a way that you should strictly follow it. Whenever we are going in the traffic, whenever there is a red signal, our mind says that we should stop our car. Very simple. Whenever there is a green signal, we should go on. Similarly, in stock market, whatever setup you have made, that you should strictly follow that setup. It is very simple and you have to follow it, but most of the people cannot follow due to lack of discipline. Mainly that.
So there is a discipline issue as well as knowledge issue. Right. So now I'm should I switch the indicators? Is there any more indicator that we
MA can apply moving average.
any more?
But from there, moving average, also the crossover is there.
So which moving average? EMA, SMA?
EMA, you can take 20.
exponential, and 20. Okay. Crossover right now, or any more indicator that I need to put in? I'll just insert those.
You can put 10, 20.
No, apart from moving averages.
No, it is up to you.
So moving averages and moving averages crossover. Crossover is actually EMA cross. So if I put it
Now
EMA
the question was, what is EMA? And that is difficult to tell by
right now we are not in a position to actually say explain all this due to lack of time and even the capacities that we have. But right now we'll be covering in certain say in a subtle manner the areas that we need to cover here, so that we'll make you understand. This is not a TA class for sure, so we cannot cover everything and anything here. So I'll just double EMA. I'll just hide this. And this I'll set to what, 20 or something else, 20. So yeah, sir, this is something that you had been doing, right? I also had been following some of the rules. There was a crossover that I was following. Now this is something that we are sharing to everyone. It's an open secret, right? So how everyone will be able to make money?
No, thing is that making money is not everybody's cup of tea,
Yes.
because everybody has their own mindset. Everybody knows everything regarding stock market. A lot of YouTube videos are there, books are there. Still, this success to reach only 10%. Why? Only in every profession, only successful people are only 2 to 3%, or you can say it is 5%. Why it is so? Because they have some certain extraordinary skills. That extraordinary skills need to be developed. Then only you can succeed. By seeing these things, I challenge you. By seeing this, all the indicators, you cannot make money, because your mind is not made up in accordance with this setup. First, you have to make up your mind in accordance with the stock market. That setup will make you money.
Right.
Tomorrow you will go, Monday you will go and follow this trick, you cannot make money, because you cannot stand the market. You don't know what is what.
So basically, this training will actually make you aware, but it may not equip you to trade directly, right? So you have to have that kind of knowledge base, that kind of experience, that kind of practical exposure. And once you develop that, then only then you can actually apply this and make money. So by this question, I just wanted to make the viewers sensitized that this is something that you have learned, good for sure, but then applying it directly won't help. It will actually say land up
Fundamental knowledge.
Yeah, land up you somewhere else. So better that you get aware and start reading, start taking out time and dedicating time to understanding the markets. That is the reason I took this question, right? So now here, Nifty 50 index, and we are again with this SMA. So sir, how do you trade this SMA?
People on the above line, I'll go buying. On the below line, I'll go.
It's so simple, yeah.
Very simple.
So I think, sir, TA is very simple.
Yes.
But then still people are not making money.
Yes. Because you need to match it, right?
Mindset, right? So yeah, so I think complexity is coming with the noise that is there, right? So now I'm
They
just
don't believe that money can be made easily. No? Thing is that from our childhood, we know that money cannot be made easily. But we always try to find out the complex things. The easy things come now, we ignore it simply.
so, but then EOD chart is a bigger chart.
Yeah.
So
No.
your patience levels will be tested like anything. Your position sizing, patience, everything would be tested.
Stock market is all about discipline and patience.
So here also see viewers can see, members can see that this particular Nifty had crossed this level at 6th of November. Again, it tried to test that level. It didn't act. It actually closed. It tested and closed up. It didn't close down. So stop loss was actually not hit. So because since if you had waited till the day end, at times it may happen that it may go a little lower as well. But then that is a part and parcel of the game, and that we have to accept it with a pinch of salt that these things could happen. But then if you believe in the system, if you believe in the say patterns, everything, then if you were traded here, then there is no looking back again. This was level of 19,360, sir. From 19,360, Nifty is still 20,100 somewhere. So almost 1,700 points rally, and this is a bigger rally of all times. That's what I feel. There had been rallies here, but then there are drawdowns here. It was supposed to test this level, but again, this was again a big period.
I think that people always want to make money from the stock market. They don't want to bear the losses.
Yeah.
Main question is that whenever losses comes, the people run away. It is not like that. You have to stick in the market. You have to be very consistent in the market. Unless there is a consistency, you cannot make money.
Right. Now, sir, I'm just putting the other EMA here. What should be the crossover then?
Then you can take it, you can just
20 with 20 or with something else?
10, 20.
10, 20. So I'm just putting it here as 10.
Stock market is for everyone, but they are making way of money is something different, in different way.
And how this is to be applied, sir, now?
Whenever there is a crossover, upward crossover, then you buy. When there is a downward crossover, then you sell.
So you mean to say when 10 crosses 20, 10 crosses 20 from down, there is a buy trade.
Down to up.
There is a buy trade. And when 10 crosses 20 on the lower section, it's a sell trade. This is so simple.
It is visual, clearly visible.
So I'm just shifting now from day to hour once again. So to see whether this is applying here as well, because now it is fiddling with 10 most of the times, but not giving a crossover, clear crossover. Crossover nahi diya abhi tak. It's actually crossover was here somewhere. Here it went up, it went down, again it went up here. So there was a stop loss that was hit here. Then again, you entered a short trade, which was again hit. A stop loss was hit here, and then it was again a buy trade. Here again the stop loss was hit, and then again there was a buying opportunity. Stop loss got hit here, though this level was much higher. This level was again much higher. So your losses were not there. Actually, you entered. You exit. So this is actually trailing stop loss.
Yeah.
This is way you can apply trailing stop loss. So TSL can be applied not just in one strategy. If you are following some other strategy and try to apply TSL, you can apply this as well, right?
It is just like a ocean having everything. You just need to apply your own strategy.
Right. So now, friends, we are coming on to the presentation once again, so that we can cover the presentation in full, leaving no stone unturned in the presentation. So open interest is something that is still pending. I'm just waiting for some 1 or 2 slides more, and we'll come on this aspect. Greeks we covered. Real life examples. So before we enter the real life, we actually covered the real life examples. There are stories, much bigger stories, much more stories. Passive income. Sir, what is passive income?
Passive income, I think you are not active in the market. You are sleeping and making no money. That's all.
So sleeping and making money is possible.
Yeah.
In options, it is possible.
100% possible. Suppose you are writing option, for example, at the bottom where you bought the call option, instead of buying the call option, you simply write put option. That you are writing the put option and you are doing nothing. You are moving wherever you want to go. Your money already made. Simple, very simple. That means you are doing nothing. You are sleeping. You are doing any other business, but your money is going. That's all. This is passive income.
Right. So, friends, passive income is basically people who don't want to trade every day. They have their portfolios intact, and against those portfolios, if they really want to hedge and make some money, some money passively, which is not active trading, then writing is one such way to make that money. Writing means, again, I'm reiterating, it's shorting, selling. So you can sell options. Say if you have portfolios, say I have certain stocks of Nifty, ETF of Nifty, then I can short Nifty call options and make money, because if the market goes up, then obviously call option mein nuksan hoga. But at that point of time, since I have the ETFs with me, I can exit those ETFs at a higher price, make profit there, and some amount I'll lose definitely in the call option. Still, I'll make a profit. So net, I'll be in profit. So these things, if you understand in greater detail, I think that will be more, it will be enriching experience, as well as will make you a richer person gradually. It will not come in a day for sure, but it will definitely come. Now, I think this was the last slide, sir. After this, there are just takeaways, but I'll just cover the open interest aspect once again, and that too on the screen. Yeah. So here, open interest, we wish to cover this way. Like I'll take it directly here on the screen. Screen pe dekha dete sir, right? So rather than the presentation, I'll just try to cover it in the screen. So we are onto the screen here, sir, and let's analyze the option chain. So open interest, you have to gauge or you have to actually check the temperature of open interest from the this particular screen, which is the option chain screen. Now this is Sensex. Since we were discussing Nifty till this point of time, I'll again shift it to Nifty. Here it is Nifty, that is 20,970, and this was a close of 8th of December. The expiry that is next coming on is 14th of December, which is next Thursday, coming Thursday. And after that, the expiry would be again the next Thursdays. So 5 days to go for expiry, 5 days from today. Otherwise, it is just 4 trading days left, right? Now here, if you see call open interest. So call open interest is at the high, that is level of 21,000. Sir, open interest, there should be two interpretations. One is from the future open interest and other is from the option side. So whatever we had covered in the presentation, that was basically the future open interest.
It is mainly based on
Future open interest. Now, when we are coming on the screen, we are talking about the option open interest. So to understand this in a better manner, I think we should again put the future open interest as well before us, right? So let's go back. So sir, is there any site that you know wherein we can see the open interest directly?
Interest that one side is there that doesn't show that.
Yeah. So there is one tool. I'll just wish to open that and make you understand better. That is the reason I'm opening this tool. As I had been stating continuously that there is no interest of ours in promoting any of the tools. It is just that we wish to make you understand this in a better manner. So it was strike dot what? It was Nifty? No. Web dot strike something. Yeah, web. I think just a So Samandeep, is the screen visible to you?
It's the Google search engine which is visible right
Google
now.
search engine is visible, right? Just
Yeah.
Yes.
Yeah, here's the URL web.strike.money.
So Samandeep, till now the speed, everything was in line or with the expectation, or was it lower, higher, whatever? You can just
Yeah,
check the feedback with the participants. I'll definitely appreciate your feedback as well, but I want the participants' feedback.
Would do. In the meanwhile, you can say continue. I'll just put it along once again.
Yeah, sure. Perfect. So friends, this is one site which is as of now offering you something which is a free of cost kind of service, and this is giving you a direct view of what is happening where. So this is say web.strike.money, and this is dashboard, and I'm on the future activity tab here, right? And here I see long built up. What does that mean? Open interest has changed drastically. In which stock? GMR Infra. It has increased by 53% from the last levels. So last level, say open interest, the contracts that will open with say 100. Now it is 153. So 153, that means 53% open interest has increased. And the price has also increased by around 11.5%. So this is a positive sign, and that is why it is categorized as long open interest. So there were 25 such contracts of stocks, including stocks and as well as index. So Fin Nifty again see 12% rise in open interest, change in open interest, and there is some amount of change in the price. And that is why it is categorized as, so this is not interpreting it on its own. There is a system built up in the background, and according to that system, this actually is the interpretation that is coming. So this is not doing it, predicting it. This is not prediction. This is something that is based on the data, actual data, right? So here's, you see, if you just scroll up and down here, you see Bank Nifty also here. So Bank Nifty open interest change is 6.8%. The price change is around 1%. So Bank Nifty stocks definitely might be on the move, on the upside, and that is the reason Bank Nifty open interest has built up on the long side. Now you see the short built up. Short built up means what? Open interest has changed, but the stock prices fall. So this is a very clear-cut indication of what we were talking, right? I hope this is understandable now. Long built up, when the open interest is built up, price is on the upside. Short built up when open interest is built up, but price is on the downside, right? So bullish, bearish. Again here, short covering is bullish, long unwinding, again bearish. So I hope that table that we were discussing is more clear now, crystal clear. And this is another resourceful site wherein you can actually spot which stocks are actually seeing the build up. But when it comes to Nifty, now let's see what happens in Nifty here. So Nifty is short covering. Nifty short covering, 2.28 change in open interest with the rise in Nifty. So Nifty it's a bullish sign again here. So you can actually watch this site during the day as well, what is happening where. But beyond that, if you watch this on the day end basis, the picture is much more clear, because during the day it happens so that in intraday, say situations keep on changing, volatile times are there, and that is the reason we are not able to spot the precise trend. But on the end of the day basis, the picture is much more clear because the data is itself very clear, and then the spotting here is much more easier. So I hope this has given you enough clarity. Now here is an options tab as well, and here again the open interest graph is here. So अब बात आती है options open interest. So how to interpret that? So sir, you are the master here when it comes to options open interest, because I personally have learned a lot when it comes to option open interest from sir. This is a very candid kind of statement from my side, because he has been mentoring me as well when it comes to options. Yeah.
Sir, okay, thank you very much for your appreciation. Now question is that whenever going for we have learned now future, now it is coming option. Whenever we are going for option open interest, then we have to decide on which expiry. In that expiry, where the open interest is high, that we have to take it as that is a resistance area. And when the open interest low, high, in the lower side, that is the put side, that is the support area. This is simply to identify the movement of the particular index or stock.
So basically, since we are talking about Nifty, we'll directly talk and jump on to Nifty only. We'll not shift our focus anywhere else. So here, sir, on the screen, the total puts, that is, this is the red bar, is some 7 crores at 38 lakhs somewhere, right? And total call is somewhere around 75 crore 46 lakh, right? 7 crore 54 lakhs somewhere. So now the PCR, that is put call ratio, is 0.9. So puts are lesser than the calls that are written. Why I say written is something that needs to be understood. The writer of the options, writer of the call option or writer of the put option gets a very less premium. He doesn't actually command more premium. And in that premium, he has that kind of ability to understand and gauge that this is a level wherein the market would actually take a support, or this is a level where market will actually take a resistance. Based on those studies, he or she or that institution writes that option. So those actually those levels actually work very much in line with the movement of the markets. If you try to observe this for next couple of days, then you will realize that this is actually holding true. So when it comes to here, the screen, the most of the options that are written are of 21,000 call. As of now, 21,000 call for 14th December expiry. And most of the puts that are written as of now are for 2,900 levels. So market currently may stay in this range for some time. And once it crosses this level, then we have to see where is the next level wherein the options, call options are getting written. The open interest is standing tall. So it may happen so that day after tomorrow, when the market opens on Monday, 21,000 is breached. Level is gone. Obviously, the unwinding will happen. The call open interest will drop drastically here. That's what we have seen in the past, and it will start building up at next levels. So people will shift their focus. People will feel that now this level will not hold at the higher side. It will definitely cross this level, and Nifty will be going further. So as of now, for this expiry, the range would be 20,900 to 21,000. But at the same time, we see that every 100 point, there is some or other open interest, even on the buy side, or rather on the call side. But call side, the open interest is after 21,000, it has shifted directly to 21,500. So in this range, the market can go till this range, maximum this level. Here, the put levels are more aggressively written. So after 20,900, if it breaks, it will again take a support here and try to bounce back. So very important that you understand the open interest from these kind of perspectives in options. Futures, the slide that we shared was true for futures, and this is what is true for options.
But this figure can be changed on Monday. It is not fixed.
Ajay sir, if you could come to the right side of Jitendra sir, your face isn't visible to the audience. Yeah, that's better. Yeah, that's better. Please continue, sir. Sorry.
Extremely sorry. So we were on to the session. We didn't recognize that the camera is tilted a bit. The screen is tilted a bit.
Not
Anyways,
so please.
Yeah. So I think this clarifies the doubt on open interest. Now, Samandeep ji, we are on to the last leg of the presentation. I'll just switch my screen once again.
So the words that come to the mind of the audience as well as that resonate my thoughts for the session overall till now is informative, knowledgeable, and wonderful. These are the words that the audience members have associated your learned session with. So thank you to you, Ansar, as well. Please, towards the last leg of your session, sir.
Yeah. So the key takeaways, theoretically, this is theoretically, we'll come on to the practical takeaway here. That would be one-liner. But key takeaways here are options have true potential for sure. Options, as they provide you many options, they have lot better potential, much more potential than even the futures part. But you have to understand, gauge the pricing part, the Greeks part. That is very important, because unless you understand the Greeks, the premiums, the values of the option, how to calculate it, which strike to trade, when to enter, when to exit. When to enter, when to exit is actually the last leg. Prior to that, all the checkpoints need to be actually looked after and checked, that these are the points that we need to understand, and then finally enter and exit would be decided. So I think that is how it is. It has a true potential. There are very much there are so many misconceptions. But we have to address in the limited time, and that's what we did. We actually tried to understand and gauge what kind of misconceptions people might have. There could be more, and based on the feedbacks, we can try to address that as well. This was not this was kind of monologue where people are listening to us and they are not able to ask questions. We can have some questions after this last slide as well, but obviously there were certain misconceptions that we were able to address, and education is something that will take you ahead. So as you are educated, a chartered accountant, as like you are right now, you have to be an educated trader or an investor in options for sure. Unless you educate yourselves, you will not be able to manage the risk, and you will not be able to realize the importance of what it takes to trade in options. Once you start educating yourselves, there will be many misconceptions which will be actually be taken over by that education, and you will actually be able to understand the true potential as well. So that's it from my side, sir. if you would like to add, my throat is actually now stretching a lot.
The thing is simple. Knowledge knows no boundary. So you please try to learn as much as knowledge in any field, whatever you want to. So far as stock market is concerned, here knowledge is important. But thing is that 80% is your psychology and 20% is your knowledge. Then only you can win the stock market. If your knowledge is 80% and psychology 20%, you cannot win the stock market. So first you have to build up your the mind setup, which is called emotion, psychology, etc., whatever it may be. But this much I will say, you just strengthen your mind to work in the stock market. And knowledge is everywhere available. Number of books are there, YouTube are there, number of persons are there who can make you intelligent, the stock market knowledgeable. But thing is that you have to make your mindset. How I am going to work in the market and what should be my strategy. So with this 80% your psychology and 20% of your knowledge, you can win the stock market. This is the theme actually.
So basically, as we have seen on the screen as well, most of the times the trades that that we were trying to spot, it was simple as some EMA that we can use and actually take a trade. But to stay with that trade, to actually follow the rules, you need to have the psychology built up, the system that should be built up. So all those things go together and then make you a successful trader, investor, and can create a few fortunes for you. One line that I wish to convey here as a key takeaway is be an expert or be with an expert. That's it from our side. We are open for questions now.
Wonderful one-liner to sum up this wonderful session. Be an expert or be with an expert. I'll take up with the questions of the members that we've had. So Mr. R. Suresh has a question. Is mutual fund investment a safe mode of wealth creation? I'm not sure if it follows with the theme of the overall market, but it's up to you if you want to take up this question or not.
Yeah, so mutual funds, definitely people sitting over there are also doing very in-depth research and obviously choosing the, say, stocks or whatever the instruments that they are choosing or investing. They are doing it with a lot of genuineness for sure. And I believe that those are, say, very much big wealth creators for sure. But active trading, when it comes to active trading, obviously, whatever you do, say continuously, like if you're practicing, you'll not leave practice. You will take some money out of practice and then invest in mutual funds, right? So if I'm talking about options today, the primary theme here is people who wanted to trade in options, wanted to do some passive income in options. That is the reason people are here and we are also here. And that money we can definitely put in anywhere, like mutual funds for that matter or stocks for that matter. But our primary source would be options. So today the topic was different. Mutual fund is a different topic altogether. In depth, unless we understand that as well, we will definitely make money, but in-depth understanding will take us to new levels, new height, for sure.
Definitely, sir. I will come up to the next question. So Ms. Sneha Rani has a question. Could you please advise about futures and option trading, whether when it is beneficial to trade on the market conditions? I think it's more on the line of news-based trading, I believe. That's the question of the respected member.
Yeah, so basically options trading, we have observed that as we already stated that the price that we need to calculate and understand whether the option is overpriced or underpriced, that is something that is very important. So calculators that we use, these are online available in the public domain. So any calculator you can use and you can just gauge the market temperature. So as of now, the temperature says that the market is bullish. So if we just see the say premium of puts for that matter, we'll see that I can show on the screen as well that 21,500, which is a ITM put, in the money put, is trading at around like not even at the intrinsic value. It is trading below intrinsic value. So it is trading at a huge discount kind of. So the market temperature says that it can go up from here as well. The level of Nifty can go. So now you have to decide whether you can take a risk in futures or options. Options with a limited risk offers you great opportunity. Futures has a risk which cannot be I cannot measure, or even I cannot spell that. Actually has an unlimited kind of risk. So obviously, if you are learning options and if you can just master that, it's better to trade with options. Event-based trading, again, news-based trading, as you asked, could be better off with options, because options, out of the money options, can give you, say, bigger opportunities in terms of the price that you have to pay, the premium that you can actually reap out of the news that is coming up then later on.
But event trading should be avoided.
Event trading should be avoided. Can be done only in options if you want to. Futures में तो नहीं करना चाहिए for sure.
You'll have no futures if you trade in futures. That's said
Yeah.
in the beginning. Just a second, sir. I'll pull up another question. So this question is from just a second. So this question is from Mr. Samir Datta. He's saying, can you share some option strategies which work well in the market? I'm sure there were strategies covered in the webinar itself. The strategies
No,
that you
basically,
shared across.
Samandeep, I'll just be very candid and honest with you.
Mhm.
Option strategies, actually, when we cover option strategies, we cover the full part of options first, and then we cover the strategies. So since we had this session, which was a kind of basic session to a little more advanced, and we covered the concepts itself in a detailed manner. So we didn't cover the strategies for sure. Strategies, sir, कितने number होंगे strategies?
More than 400 strategies are there.
So there are 400 strategies, and of that, if you want to have a couple of strategies, say 5-10 strategies, which you can recurring basis apply and try to trade, there could be 12-15 strategies that you can follow. We personally follow like 4-5 strategies, not more than that. And those strategies we can definitely discuss at a later stage when we have a more advanced session. This could be wrapped up here with a basic understanding. There are lot many strategies, Samandeep, for sure, and it will actually boggle people's mind if I just start
Definitely
talking.
not to be covered under 180 minutes.
Yeah,
that the
yeah.
target of the webinar was. Right, sir. I'll get on to the other questions. So, Mr. Nanda Kumar is asking, please suggest some good books / courses on options.
Yeah, focus on options.
So he's the right person when it comes to books, because as I said, he has mentored me as well. So he has read a lot of books.
Uh-huh.
I know a good site wherein you can actually have a free material even for the strategies part. So it is from one of the members of ICI. He is actually the promoter of that site as well, and it is eLearn Options. You can just note it down. I'll not put it black and white anywhere. It's eLearn Options. One of the tools to learn options, wherein basics of options through videos are also covered, and strategies are covered along with the payoffs. So payoff table is created in a visual format, in a graph format, and you can understand from that whether where your trade will actually turn into profit, or where you can actually incur a loss. So strategies as well are discussed. Basic as well as advanced strategies are also discussed, and that is a good resourceful site for sure.
So, Mr.
And for
Hussain,
No,
yeah, sorry, please.
One book you can follow. That book is Understanding Options by Michael Sincere.
Understanding Options by Michael Sincere.
Michael
So
Sincere.
just Google, the concerned person can Google, member can
Yep.
Google, and have the book in hand.
Right. I hope Mr. Nanda Kumar has taken a note of it. Next question is by Mr. Hussain. He is asking, as you know that options are zero-sum game, meaning one party is gaining at the expense of the other. So do you believe options can be used to generate long-term wealth on consistent basis?
Yeah. It can be possible. It is a zero-sum game because derivative market itself is zero-sum game. Whenever somebody is losing and somebody is gaining, it is very simple. We have already understood in the contract there is a buyer and one seller. That means out of one seller and buyer, one person is going to lose and one person is going to gain. It is very simple. But thing is that we should know in which side we should sit. This is most important. That means you need to learn a lot of things regarding option market. Then automatically this can be done.
So primarily, say if I sum up this way, that options were introduced for hedging. The number one aspect was hedging. Now people who actually have say long trades, say in the form of equities as well, deliveries as well. Even for that matter, mutual funds, they also trade options. So they actually create a position, a contra position in options. So it is meant to hedge. Now, if you keep on your portfolios and start doing this hedging part regularly and consistently, you'll definitely make money over there as well. Not doing it naked for sure. In case they perceive a risk over there, they will not be doing it naked, but they can do it against their portfolios and make money for sure.
The next question is by Mr. Sumit N. Shah from your hometown, Nagpur. Is currency option trading a good option? Can we do option selling in currency options as it is somehow controlled by government intervention? So volatility in currency is limited.
Yeah, actually, currency, the timing is also a little extended one till 5 p.m. And what happens is currency trades, they are much more controlled even by the RBI intervention and all. But what happens is, say, since we are currently today talking about Nifty, and we didn't cover currency, so I don't think we should be saying bad about currency for sure. Currency is definitely a good way to make money, but people should understand the nuances of it. Also, currency options, the liquidity is little different over there. The liquidity is actually not much. People who trade in currency, they trade in futures of currency more than options, and even the currency option expiry is little different. So futures expiry is not in consensus with the options expiry. The dates would be different. So then again, there is a confusion. So currency is a little more advanced version when it comes to options trading for sure. And it's better to trade in futures in currency rather than options, considering the liquidity part.
Okay, so very well noted. Next question is by Mr. Sandeep Raheja. What is the minimum funds required to start up the options trading for a good mindset practice?
I already told you it requires at least minimum 500 rupees to make it a 5 crore. It is possible. But the thing is that you should build up the knowledge of 5 crore. But normally it takes, you have to put at least 50,000 you can put in the market, then start option.
Okay, half a lakh rupees it is.
Yeah, Samandeep, you can take 3-4 questions more, and we'll
Sure.
on by dot 9 p.m. since we started at 6.
Definitely, definitely.
And if there are many more questions left over, you can actually say compile them and send it on email. We'll try to answer it through a podcast if possible, because that will save our time also to type and send it across.
Definitely, sir. Definitely, I can do that. And you may share across your email address as well, so that participants may reach out to you via email should they require.
Sure.
So next question is from Mr. Amritpal Singh. He's saying if we are trading on hourly chart, then ideally how long to hold position? If we are trading on daily or weekly chart, then ideally how long? So I think the holding period is the question. So if I'm trading a trade on hourly basis, what should be my average holding period? If I'm trading on a higher time frame, what should be my holding period? Over to you, gentlemen.
So basically, sir, I think you already covered this, and we also discussed this, that if you're wanting to trade for a longer period, like if you have in mind, say, a couple of days or couple of months in mind, then probably the best chart to look at is the EOD chart, because that gives you a better picture. And say during the day, there could be volatile times. So considering those volatile times, I think it's better to avoid that daily volatility and trade in a larger time frame, that is a daily chart. And say going below daily chart, say hourly chart is definitely for positional traders. Couple of hours or rather a swing. So swing would be like, what is a swing? Hum jhula bolte hain na, jhula. So that is a swing. So what is swing? It goes up, it comes down. So it goes this side, it comes again to that level, it goes again to another level and comes back to the level. So swing is that. So keep this in mind. The swing is this. So hourly is all about swings, and daily is all about positional. Positional will be say a longer trade, and we have seen this on charts as well, that positional is a much longer trade at times.
Okay. Over to the last question, sir.
Yeah.
Yeah, just a
I'm just
second.
typing my email address, so don't worry.
Mr. Kulshekhar Jajodi has a question. Which indicators beginners should use to focus in the option segment?
Sir,
Which-
you would like to answer this? Indicators.
Indicators for the beginners, sir.
Indicators for beginners when in trading.
There you can follow Bollinger Band or this thing, MA, moving average.
The ones that were demonstrated during the session.
Yeah. We have already.
So I think for beginners only, we have considered those kind of indicators. Else there are more complex indicators in market. But I think trading is all about simplicity. It's not about say learning the complex indicators. It's all about simplicity. So I think I'll just if we are wrapping up, this is the email address. I hope the screen is visible to you.
Yes, sir. Both of your email addresses are clearly
Yeah,
visible
so
on the
here
screen.
the email addresses are there, and I'll just press this. So it's more clear, and so people, members out here can note this down and do write your queries and send it across to us. So we'll try to cover it in an elaborated manner, if possible, or on a blog or something, on a text to mail, something like that. So, Samandeep, are we on to the end now?
Yes, sir. I believe we are, as all good things have to come to an end. And at the beginning of the session, I just came with the mindset that I'll be learning about futures and options, but there were multiple interpretations of options that I've learned. The option of indicator of Bollinger Band or EMA, the option of various strikes that I can have, the options of various underlines that I can trade into, the option of moneyness of the ATM, OTMs and the ITMs. The option of entering a trade, which is very, very fundamental, I believe, for all the option traders. The tools which are available, the options of various tools, the Sensible, all those payoff charts that were available, the trading views, everything, the tools that were available, option of that, and the option of choosing the type of trades, be as intraday or positionals. I thank you, gentlemen, from the bottom of my heart for enabling us the broader meaning of options, giving us an eye-opening session. And the committee would obviously want to engage in a further advanced level sessions with both of you gentlemen for the advanced knowledge of the members. I thank you all for a very good evening. And I thank all the members and the viewers who took out time on the Saturday evening for understanding the options. You also had an option to spend some time in another manner, but you also chose to spend this time with us. Thank you so much, ladies and gentlemen.
Samandeep, one more
Please,
thing.
sir, please.
Just for the sake of audience and members, I think there were a lot many members who wanted to attend. I got a messages that they were not able to spare time today. So I told them that the recording would be available very soon on the committee's website. So I think that would be there for sure, right?
I'll have to check up with the team and I'll get back. I believe there, because the session was being recorded, I believe. So for the benefit of larger audience, we'll get in touch with the IT team and whatever the best solution is possible, the committee will definitely take in care.
So fine. Looking forward to that as well.
Will do. Thank you so much. With that, ladies and gentlemen, I would like to formally wrap up the session and thank the respected speakers, Jitendra sir and Mr. Ajay Bakra sir, for taking out time on this Saturday as well. They also had an option to kind of spend this time somewhere else. They chose to enlighten us with their lovely thoughts and their knowledge they have gathered so far. Thank you so much, everybody. That's a good night from my end. Thank you. Bye-bye.
Bye-bye.